Right. So, hi everyone. I hope you all are doing good, and we are meeting for another discussion. So, we are planning to complete this lesson today. We'll see how it goes, depending on whether we can complete this today. So, if we can complete, this is done. If not, I'll arrange another small session to complete if there's any pending part to be completed by the end. Right. So, the discussion that we are going to have today is marginal costing. Marginal costing. Right. Please make sure that you have already downloaded the tute. It means if you are a full payment student, you should have the tute with you right now. Okay, right. I'll give you 1 minute if you are wondering where this tute is, so you can check. Right, give me 1 minute. Right, this is the tute. Marginal costing. I'll keep the screen for a few seconds, so please make sure that if you don't have this to download this, you should be having this anyways. Right. Shall we start? Shall we start? So let me go to the whiteboard first. So we'll be dealing with the whiteboard a lot today than previous. Right. Now tell me, in most of the businesses, day to day, we have to make decisions, right? Decisions have to be made day to day. So there can be types of decisions called short-term decisions, and there can be long-term decisions as well. So this marginal costing is about making short-term decisions. So it's all about decisions. So we are making short-term decisions, marginal costing, marginal costing, right? We are planning to take short-term decisions, right? Marginal costing. Now look at this. By understanding how the cost behaves in a business, we should be able to categorize the cost into two different types. By any chance, if you know, just try to tell me what are the two types of cost that we have. Anyone? Just try. If not, I'm going to give you an example. Let's say we are doing an accounting day. Accounting day. Let's say I charge a fee from you, and from my side the cost would be to organize the whole, right? So the organizing the whole will be one of the costs that I'll be having. And then I'll be having another part called, let's say we are getting students in. At the time of a student coming, I have to print something and give to each person, right? So there are two costs. I have to book a hall, and I have to print and give everyone when they are coming in. So there are two types of cost. Remember, do I need to incur any extra cost when another person comes in? Yes or no? One of them is I had to book the hall. The other one is I had to print one by one and give depending on the number of people who are coming into the hall. Remember, there are two types of costs that we need to consider. Yes, you have done it correctly, right? Costs we can categorize into two parts, right? Costs can be categorized into two parts. One of them is variable cost, variable cost. The other one is the fixed cost, fixed cost. In the example that I told you that I have booked the hall. Now let's say I have to pay 50,000 for the hall that I have booked, and let's say we have seating capacity of 100, right? For an example, I'll be doing this slowly today, right? So you will be able to understand it quickly. And then will my cost change if one person comes and the next person comes, the third person comes, the fourth person comes, right? Depending on the number of students come into the hall, will the payment that I need to do to the owner of this hall change? Yes or no? I have booked the whole hall, right? No matter whether one person comes in, two people come in, three people, four people, up to 100 people, will there be any additional cost because of the people coming in? Yes or no? Just try to tell. Or put to the chat. Yes or no? I think we have enabled. Let me check. Good. Give me 1 minute. Yes, it won't change, right? So those kind of costs we call as fixed cost. The other one, I told you that when a student comes in, I have to suddenly print something and give. Print something and give. If two people come, we have to print two papers or something, right? If the third person come or the third student come, we have to print another one and give. Is that a variable cost or a fixed cost? Would it change or not? Depending on the number of heads who are coming into the class. Change or not? It is variable, which means it will be changed, right? So now what we are going to do is we are going to identify what a variable cost and what a fixed cost is, right? Let's go to see what a variable cost is. Variable cost. Variable cost. I'll try to use the wordings that they have given, right? Any cost that changes directly. Any cost that changes directly in proportion to the volume of production. In proportion to the, without telling the production, I'll tell it as number of units. Number of units, proportion to the number of units, right? Which means the volume. So I'm trying to use the same wordings that's why I'm looking at this. Known by is known by variable cost. Is known as variable cost. Variable cost. Please take this one down. So this is about variable cost. Any cost that changes directly in proportion to the number of units is known as variable cost. Take this one down. Right? Now I'll show you this in a graph also. Let's say I prepare a graph to show the total variable cost. I'm going to show you the total variable cost. So this is about total variable cost. Total, I'll put VC for the variable cost, total variable cost. Let's say I'll put the cost here and I'll put the volume here. Volume means the number of units, right? And 0 here, volume means number of units. Number of units. Let's say we have 1, 2, 3, 4, and 5 units that we are considering, right? And let's say the per unit, the variable cost per unit is, let's say, 100. Let's say it's 100, right? And I'll put 100 here, 100, 200, 300, 400, etc. So here 1, 2, 3, 4. I'll stop it there from 4. Right. Now tell me what happens when we increase the number of products or number of units. What happens to the cost? The cost will increase or not? To produce 1 unit, we will be incurring 100 cost. To complete 2 units, there will be a cost of 200. For the third one, for the whole 3, we will be having a cost of 300. For if we are producing 4, so there will be a cost of 400, which means you can see that the line will go in this way, like this. So this is the total variable cost line. Why? When the number of units increase, the amount of money that you would need to spend to cover this cost also would increase. right? Got it? If you produce 1 unit, you will incur 100 rupees. 2 units, 200 rupees. 3 units, 300. 4 units, 400. Every time when you increase the number of units, on the other hand, the variable cost should definitely increase, right? So this is how the total variable cost line behaves inside the graph. Please take down this one also. Take down this one also. Keep the screen for a while. Please raise your hand if you need more time. So this is the total variable cost. Huh? Total variable cost. Raise your hand if you need more time. Right. I'll show you this using another graph. Look at this carefully. Huh? Now I'm not going to show you the total variable cost. I'll show you the graph how it will look like if it's the unit variable cost. Unit variable cost. Unit VC, which means variable cost per unit. I'll put the details here as usual. 100, 200, 300, and let's say 400. And let's say we have 1 unit, 2 unit, 3 units, and 4 units. We have the 0 here, the cost here, and the number of units or the volume here. Now what we are looking at? Unit variable cost, right? If we produce 1 unit, what is the unit variable cost, which means the average for 1 unit? It will be 100. If you produce 2 units, for the second units, how much extra we have to bear? Another 100. For the third unit, another 100. Remember, even though the total variable cost goes like this, because when the number of units that we produce increases, the total, this is the total, and the total cost increases. But if we look at the unit variable cost, it's this 100 for each volume, each number of volume, right? Which means if we produce 1, still the cost would be 100. If you produce 2, for the second one, it will be just 100 again. For the third one, another extra 100. And for the fourth one, another extra 100. Since we are looking at the unit variable cost, so it will be the same every time like this. For the first one, the unit variable cost would be 100. How to get that is, let's say, we will need to incur 100 for 1, which means it's 100. And 200 will be incurred to produce 2 units. So what is the average? 100. For the third one, 300 divided by 300. If we consider the per unit variable cost every time, it will look like this. It will look like this graph. Why? Even though the total variable cost increases depending on the number of units that we produce, the per unit variable cost stays the same, right? This is the unit variable cost line. Unit variable cost line, right? This is how the variable cost lines behave. Total goes up. If we consider the average, which means the unit variable cost, it will be the straight line, right? Please take down this one also. Move away. Right, I'll be here. Right, I'll keep the screen. Right, please raise your hand if you need more time. Please raise your hand if you need more time. If you need more time, please raise your hand. Right. Now we are going to talk about the fixed cost. Now we are going to talk about the fixed cost. The next type is fixed cost. Fixed cost. So now you know what variable cost is. The variable cost depends on the number of production or simply the number of units that we produce. So sale or it depends simply on the number of units, right? And the fixed cost, any cost which do not change, any cost which do not change, do not change. I'll try to use the same wordings. With the activity level of volume, with the volume, with the volume is known as fixed cost. Is known as fixed cost. So what do they mean here? No matter how many number of students, no matter how many number of units that we produce, no matter how many number of units we sell, so it depends on the volume, right? No matter the number, cost will not change. Like the example that I gave you, you come into the class, no matter whether one person comes or 100 students come, I have already booked the whole, so that is a fixed cost for me, irrespective of the number of students who come in, right? Like that. Take this one also down. Right, and then we'll prepare a graph for this one also. We'll prepare a graph. So before that, I'll give you some information. Let's say we have the number of units here. We have the number of units, and we have the fixed cost. We have the fixed cost. Now look at this. Let's say we produce 0, or the number of students who come to the accounting day is 0. If I have booked the whole, don't I need to pay for the whole? I have to, which means irrespective of the number of students come, or irrespective of whether anyone is not coming, so still the cost would be there, right? For an example, I'll take the cost as 32,000 here, or let's say 3,200. Right. If one student comes, it will stay at 3,200. If two students come, it will stay at 3,200. If 3 students come, still it will stay at 3,200. If 4 students come, still it will stay at 3,200, because the fixed cost does not change. It does not depend on the number of units that we produce or number of students. So simply we call it as the volume. It does not depend on the volume. If we put this into a graph, like this, here 0, here the cost, here the volume, or number of units, right? So now we are going to talk about the total fixed cost. For the fixed cost, we usually call as FC, fixed cost, right? So here we have 1, 2, 3, 4, right? I'll put here 1,600 and 3,200 here, right? Now look at this. When you produce 1 unit, when the volume is 1, the cost would be 3200. When it is 2, still 3200. When it is 3, still 3200. When it is 4, still 3200. It means that the fixed cost will not change depending on the volume, right? So the line would look like this for the total fixed cost. For the total fixed cost, this is the total fixed cost line. Total fixed cost. You can see a parallel line like this. This is how you can identify whether it's a fixed cost. Now, if you go back and see the unit variable cost, same kind of a line, and total fixed cost, it goes the same way. So if you look at the unit variable cost and the total fixed cost, the lines will go parallel to this volume axis, right? Take down this one also. This is unit, this total fixed cost, right? Now, if we look at the unit fixed cost per unit, I'll take it to another different graph. I'll take it here like this, right? So I'll keep the screen for one more minute. Right. So now look at this. If we take the unit fixed cost, right? Unit fixed cost per unit fixed cost. Now we can take average of this. I'll take the numbers to the right side again. Let's say we have the number of units here and the fixed cost here and the fixed cost here. Fixed cost. When the volume is 0, when the volume is, I'll take from 1, I'll take from 1, 2, 3 and 4. The fixed cost will remain at 3200 irrespective of the volume that we are discussing. Now, if we take an average per unit, what is the per unit cost? So, I'll take the unit variable fixed cost. Unit fixed cost. What is the unit fixed cost? If we produce one, it will be 3200. 3200. By spending the same 3200, if we have 2 units, what is the average fixed cost for 2? Tell me. 3200 divided by 2. How much is it? 1600. 3200 divided by 3. If we have 3 units and if the fixed cost is 3200, so we'll be having about, let me check 3200 divided by 3. It's like 1066. 1066. If we go for 4 units, still the fixed cost will not change. It will be 3200. So at the unit number 4, there will be a cost of 3200 divided by 4, 800. 800. Right. This is the unit fixed cost or the average fixed cost. We can tell it as the average fixed cost also. Average fixed cost. Average fixed cost. Right. So now the average fixed cost or the unit cost goes down when the number of units increase, because the fixed cost never increases or decreases. It remains the same, right? So you will find this line like this. Look at this. I'll put 0 here. 1, 2, 3, 4. 1, 2, 3, 4. So here I'll start from 800, 1600, then 2400. So I think I need some extra space. right? I'll start from 800 here, and then 1600, then 2400, then 3200, then 4000, likewise. Now if we put the dot relevant to this, if we produce 1 unit, the cost would be the unit fixed cost or the average fixed cost. So we can call it as AVC also, average fixed cost is 3200 here, it will be here. When it comes to 2, it will be 1600, it will be here, somewhere here. When it comes to the third one, 1066, it will be like here, 1066. When it comes to the fourth one, it will be 800. It will be 800. Now you can see the average fixed cost line is something like this, right? This is the average fixed cost. Average fixed cost line. Why? When the number of units increases, the average fixed cost definitely decreases, right? So it will not go straight like this. Why? Because there's no change to the fixed cost. Then when the number of units increases, the average fixed cost line will go like this, right? If you see something like this, so most probably we are looking at the average fixed cost. We sometimes call it as AVC, average, sorry, AFC, yeah, not AVC, AFC. Right, please take down this one also. These graphs, they will not be telling you to prepare graphs, huh? Remember that. They will not ask you to prepare graphs anyways. I'll keep the screen. Right, I'll keep the screen for a while. So sometimes these graphs can be tested in the MCQ questions. They will not be asking you to prepare the graphs anyways, because there are more than enough number of things that they can check. Now go through the variable cost and fixed cost graphs that I gave you again. Right, raise your hand if you need more time. If anyone needs more time, please raise your hand. So now we are going to jump into some formulas. These will be tested anyways in the MCQ papers also. These will be tested. There's a chance to get tested in the second paper as well, right? Most probably there will be a question in the second paper as well. So usually we have in the second paper as a part of a question, right? So we have a set of concepts to learn. Please raise your hand if you need more time to take down this one. Anyone? Right. So I'm going to erase this. So there's a set of concepts that you would need to learn. Concepts to learn. There are a set of concepts to learn. Now, I'll explain what that is. Before that, now tell me, what are the two types of costs that we have, the variable cost and the fixed cost? If we have the sales, let's say sales, we have 1000. If the variable cost is, let's say 200, then we get an answer as 800. From that also we can deduct the fixed cost like this, let's say 500, and can get the profit. Now, what I want you to understand is that, let's say we have revenue or sales. If we deduct variable cost and fixed cost, both only, we can arrive at the profit, which is 300. Now, there's something that you would need to learn. Here, when you deduct the variable cost from the sales, you get 800. There's a specific name that we have for this 800. What is that? We call it the contribution. So remember, the contribution does not include the fixed cost. Contribution means after deducting the variable cost from the sales, you can get the contribution. Then after you deduct the fixed cost, also only you will be getting the profit. Why? If we segregate the cost, it will be variable cost and the fixed cost. If we directly deducted the sales minus variable cost and fixed cost, you will be arriving at the profit. But here in this lesson, we will be needing this contribution part also, right? There's calculations to be done, contribution, right? So remember, this is something that you didn't learn earlier. When you deduct the variable cost from the sales, you will be arriving at the contribution. Take down this one. And after deducting the fixed cost, also only you can arrive at the profit. So in between the variable cost and the fixed cost, there's another concept called contribution. Right? Now we are going to discuss the concepts that we would need to learn. Right. Number one, there's something called unit contribution. Right? You can take down with me. I'm not going to explain this. So I'll be listing down what you need to learn, and then I'll explain using a question. Let me make it manual. Right. And then total contribution. You can write with me. I'm not going to explain this, but I'm going to show you what we can get from here, right? And number 3 is the current profit, or sometimes we refer as profit only. Number 4, break even point. We call it as the BEP. We can check it in the number of units. Don't worry, I'll be explaining this while doing a question. And then the break even point, we can call it as the break even point, BEP. Using the value also, we should be able to take break even point. And there's something called margin of safety. Margin of safety, right? We can tell it in units as well as in a value. Margin of safety, we can tell it in values also. Margin of safety, right? And then expected or target profit. We have formulas for everyone. Target profit. If you target a profit, how many units that you would need to sell, or how much of value that you should have as sales. So we'll be talking about that, right? So for an example, if you target a profit of 100,000, now how many units that you would need to sell, I'll tell that today, right? Let's say you want 100,000 by the end of this month. So by the end of this month, I'll tell you how many units that you have to sell by considering all the costs and everything, right? There's a formula. So this will be needed for you if you are planning to do any business, huh? And the expected profit, expected or target profit, you can tell it from the value also. If you do this much of a sale, you will be arriving at your target profit. We can pre-plan for that. And there's something called contribution sales ratio. Contribution to sales ratio. For the same ratio, we call it as profit volume ratio also. Profit volume ratio also, right? Please take these ones down. So these are the 10 concepts that we are going to start learning. I'll keep the screen for a few seconds, then we are directly going into questions, and through the question I'll explain all of these. So all of these are formula driven. All these will be formulas for some small calculations, not hard. This is an area where you can score the 100% marks. It's easy, but there's a particular logic that you have to take into your mind. Right? Please raise your hand if you need more time. Raise your hand if you need more time. Right, I'll keep the screen. So there's a link between this unit contribution and the contribution sales ratio. I'll explain while doing. Even though there are 10 concepts to learn, so when you complete one of the questions, you will feel that comfortableness. Don't worry. Right, again, please raise your hand if you need more time, or shall we go for questions directly now? Through the questions, I'll explain all of these to you. Okay, right, now come to question number 2. We are going to start from the question number 2. We are going to start from the question number 2. Keep the question number 1 as it is, and question number 2. So here, look at this information. Question 2. Production units have been given 500 units. Selling price per unit has been given 200. Variable cost per unit is given. Fixed cost is given. How many number of details we have? 4. Believe me, using this 4 information, we have the ability to calculate all the 10 areas that we discussed that we need to learn. For an example, contribution per unit, total contribution, profit, break even points, margin of safety, required sales volume to achieve this is the target profit, and the value, we can tell it in value as well, right? Now we'll start doing this, right? Take question number 2. Take question number 2. Right? We are going to start question number 2. Now we are going to learn all the concepts within 15 to 20 minutes. Then it's like we are done. Then we have to practice the questions, right? Question number 2. We'll be starting with question number 2. Question number 2. First, they are asking for what? Contribution per unit. Contribution per unit. Contribution per unit. Contribution per unit, right? So contribution per unit. So what do you mean by contribution? selling price minus variable cost. If it is the per unit selling price minus per unit variable cost, right? Selling price per unit, I'll put it as per unit selling price, and if you deduct the per unit variable cost, I'll put it as VC. VC means variable cost, or you can tell it as selling price per unit, variable cost per unit as well. Haven't they given that information? Selling price per unit is available 200, variable cost per unit is available, which is 120. So this is 200 and this is 120. So you will be getting the contribution per unit. Contribution per unit. So the contribution per unit is what? You have to deduct the per unit or variable cost per unit from the unit selling price. That's it, right? Then you will be arriving at the contribution per unit. First one is done. This is the question number 2, part 1. That easy, ne? First one is done. So every time remember, if you are asked to prepare the contribution per unit, what you need to deduct? Variable cost from the selling price. Make sure that both of them are the per unit ones. Then you will be arriving at the contribution per unit. Got it? I'll keep the screen for a few seconds. And here, if you can remember, I told you something like this. I'll put it under this. The 10th concept that I told you that we can discuss. This one I'll show you. Contribution to sales ratio or profit volume ratio. How to get that? Contribution to sales ratio, or we call it as the profit volume ratio. Profit volume ratio. How to get that? You have the contribution per unit. Contribution per unit, and you have to divide it by selling price per unit. Selling price per unit, and take it as a percentage. The answer will be taken as a percentage. Simply what you have to do? Take this 80 as a percentage of this 200. So what is the answer? 80 as a percentage of 200, and if you multiply by that by 100, you will be getting it as a percentage. So that is what we call as the profit volume ratio or the contribution to sales ratio. Nothing much, right? 80 divided by 200 into 100, how much? What's the percentage? Simply we are telling 80 is what is the percentage of 80 from the unit selling price. That's it. 80 divided by 100, not 100, 200. So it's 40%. The answer is 40%. Here it's the 40%. 40% is the contribution to sales ratio or the profit volume ratio that we are talking about. Right? Take this one also down. Right? And then the next one, second one. So what they are asking as the second question. First one was the contribution per unit. Now they are asking for total contribution. Total contribution. Total contribution. Now you have found what the contribution per unit is. Now take that first. Contribution per unit is there. Contribution per unit. So this is the contribution per unit. To get the total contribution, you have to multiply it by the number of units. That's it. Multiply it by the number of units. Number of units produced, sold, they can be giving it anyway, right? So the contribution per unit is 80. 80. And how many number of units are sold or produced? How many? production units is 5,000. So you have to multiply that per unit contribution of 80 by 5,000. Then you can arrive at the total contribution. So the total contribution would be 80 into 5,000, right? 400,000. 400,000 is the total contribution. Now you can see a proper logic here. So we took the contribution per unit, and then if you multiply it by the number of units, so this is per unit, no? If you multiply by the number of units, you will be getting the total contribution. The second one is also done. Now we have already learned three concepts: contribution sales ratio, contribution per unit, and the total contribution. There's only another 7 left. Right? Then let's go to the third point. You can follow me and do third one. What they're asking for? Calculate the profit if 5,000 units are sold. Right now, at the 5,000 level, we have to see how much of a profit that we have earned. So I'm gonna use the full. I'll be starting from the beginning. I'll be starting from the beginning. What we did first to identify the unit contribution, I'm gonna find the profit. Profit at 5,000 units level. I'll start from the beginning, so it will be easy. So let's say we have the selling price per unit. Selling price per unit, which is 200, and we deducted the variable cost per unit. Per unit it was 120, and we arrived at the contribution per unit. Contribution per unit, which is 80. So we arrived at this 80. Yeah? We arrived at this 80. Now then, we can see in total how much of a contribution that we have taken. Total contribution. Total contribution. Total contribution is what? Total contribution. So I'll take it separately. Total contribution means number of units can be multiplied by contribution per unit. Contribution per unit, or you can take it in the other way. Contribution per unit multiplied by the number of units. Since we have taken it in the other way, I'll use that way, so it will be easy without swapping the names. Contribution per unit. If we multiply this by the number of units, you will be getting the total contribution. You will be getting the total contribution here. That's what we discussed. So here, contribution per unit is 80. Number of units that we are discussing is 5,000. So what is the total contribution? It would be 400,000. 400,000. So far what have we deducted from the selling price? Only the variable cost. To get the profit, there's another portion of cost that we need to consider. What is that? Can you remember? Out of the two types of cost, we have considered only the variable cost so far. We have deducted the variable cost and identified the contribution and multiplied by the number of units. We got the total contribution. We have deducted what? I heard you, Pudha. What?
Fixed cost.
Fixed cost. Right? Fixed cost. When you deduct the fixed cost from this, can't you arrive at the profit? Fixed cost, they have given a total. So we have to take the total contribution first. Then only we can see how much it is in total. Then we can deduct the fixed cost, right? So at the units 5,000 level, it will not change. The fixed cost will not change. Only this will change. That is why we have taken this first, and then we deduct the fixed cost that they have given. Fixed cost is 240,000. Fixed cost is 240,000. So you arrived at the profit now. So we call this as the current profit. How much is the profit? 160,000. This is what we call as the current profit, right? Current means at the activity level of 5,000. So I started from the beginning again. If you already have taken this, you can start from the total contribution also. Simply total contribution minus fixed cost is what? The profit, right? Total contribution minus fixed cost is the current profit. I'll write that also. Or if they are directly asking for the profit, you can start from here, identify the contribution per unit, and then take the total contribution, deduct the fixed cost, you will be arriving at the profit, right? So the current profit can be taken in this way also. If you already have the total contribution, you can deduct the fixed cost from that. Right here, since we need to learn, I took the total contribution again as 400,000. Earlier also we found if you deduct the fixed cost from the total contribution, we will be arriving at the current profit, right? So why I need you to follow this way so far is sometimes here and there they'll be giving some information. You may need to go backwards and see what the selling price is. You may need to go backwards and see what the variable cost is. You may go back and see what the contribution per unit is. You may go back and see what the number of units is. You may go back and identify the total contribution. Likewise, it can go anyway. The question may be asked in a different way. So that is why I'm following this method. So it will be easy for your learning. So remember this method that I did. Starting from here, how we arrive at the profit. Sometimes they will be asking from here to here as well. Then we know how to go backwards as well. The third one, profit at 5,000 units level, which means the current profit. I'll keep the screen. Right. Then let's look at the fourth question. Break even point in units. Break even point in units. Break even point in units. I'll take it here. Number 4. Break even point in units. BEP in units. BEP means break even point. Now you should know what the break even point is. What do you mean by the break even point? Anyone? What do you mean by the break even point? Think and tell me. Give us 1 minute, Putta. There's a power outage. Give us a few minutes. Huh? Putta, give us 1 minute. Huh? So we are trying to figure out whether we can get the generator power, right? So finally we are back somehow. I hope you can see me and hear me well, right? If not, just tell me. Right. So I think we lost the third question, but let me quickly do that third question also, and then we'll jump into the fourth question that we were started, that we actually started, which is the break-even point, right? So I'll be doing the same again, what we did for the third one, and I'll get the total contribution. Total contribution, we got it from the contribution per unit. Contribution per unit was multiplied by the number of units, and we got the total contribution. If you can remember, this was 80 and multiplied by 5,000, we got the total contribution as 400,000, and then we deduct the fixed cost from here, which was 240,000. Then we got the profit as 160,000. Right? This is what we did for the third question. So I'll keep the screen if someone needs to do this. Right? Now we are going to talk about the break-even point, which is the question number 4. Break-even point. Break-even point. So we call it as the BEP also. And they are asking for the number of units. So here, break-even point means the level where a company can survive in the market without making a profit or a loss. Right? I'll write that first. Break-even point means BEP means I'll try to use the same wordings that they have given. The level in which a company can survive in the market without making any profit or loss. Without making any profit or loss. Please write this one. Which means even though we don't have a profit, still we can continue our business if we are not making losses, which means profit zero level. Right? If the profit is zero, we don't need to wrap up and go. So we have covered the cost. Profit zero means we have no profit, no loss. There's no loss means still we can move forward up until the profit is made. Remember, the break-even point means where the profit is zero. Break-even point means in the break-even point, the profit should be zero. Profit should be zero. That is the break-even point. Take down this one. Yeah. Now we look at this. Now what is unknown? The number of units that we need to profit and we need to produce in order to not to have a profit or a loss. I'll use the same scenario like this just to explain, then I'll tell you an easy way to do this. Right? Now I'll be starting from the beginning. Our selling price per unit selling price per unit is 200. Then the variable cost per unit is 120. When we deduct this, we will be getting the contribution per unit. Contribution per unit, which is 80. So we have arrived at this 80. And then I'll follow the same. Total contribution. Total contribution. How the total contribution is made? Contribution per unit multiplied by the number of units. Right? Then we can arrive at the total contribution. Then when we deduct the fixed cost from that, when we deduct the fixed cost from that, we'll be arriving at the profit. We'll be arriving at the profit. In the break even point, as I told you, what should be the profit here? In the break even point, tell me. Tell me. Break even point means the profit should be
Zero.
zero, right? Now the profit should be zero. What we don't know is the number of units, right? I'll fill the details that I know for now. Contribution per unit we identified as 80. But the number of units that we need to sell or produce to achieve this zero profit, do we know? That is what we are trying to find, the number of units in as per the break even point. So we don't know the total contribution also. Why? In order to find the total contribution, we should know the contribution per unit and multiply it by the number of units. Since we don't know what the number of units is, we don't know the total contribution also. But the fixed cost they have given me, which is 240,000. 240,000. Now we are trying to see how many units we need to produce in order to at least cover the total cost. At least, which means we have to first make a loss. First, come out of making a loss, which means the profit should be at the zero level initially. Somehow we have to make it zero. Then going upwards means profit. We can't go below that, right? Which means to have a not a profit, not a loss, which means profit should be equal to zero. To have it zero here, after deducting the fixed cost of 240,000, what should be the total contribution? Now we are going backwards. To have a profit of zero, this zero comes by deducting fixed cost from the total contribution. Total contribution should be how much to make this zero? Yeah. Huh? Profit equals what? Total contribution minus fixed cost should be zero. Now tell me what the total contribution should be to make the profit zero. Unmute again. I'm getting chats, I can see. Here this. Here this. Thank you. Here unmute again, but to have a zero here after deducting 240,000 from this, what is this value? To make this zero, it should be 240,000. If we have 240,000 here only, we will be having a profit of zero. To have 240,000 here, how many number of units you should produce? 80 into this many number of units should be equal to 240,000. So this 240,000 can be divided by 80. How many units will you be getting? Here. Here. How many units? 3,000, which means you identified that to have a profit of zero or a loss of zero, you came backwards and identified the number of units that we need to produce. Simply, this means that if you produce 3,000 units, you will be arriving at no loss, no profit situation, right? Please raise your hand if you understood the logic behind this. Good. Put your hands down. Right. I'll keep the screen, take down this one first. So what we did was, we went this side and we identified this one. We came backwards. හරි නේද? Now by looking at this, there's an easy way of getting this 3000 without doing all of this work also. Now at the break even point, can you see a similarity between two variables? Not variable cost, variables, two factors. You should see a similarity. What is the similarity? At the profit zero level or at the BEP level, there are two things that the values are the similar or the same. What are the two items?
Fixed cost and total contribution.
Very good. Fixed cost will be equal to the total contribution at the level of break even point. Here, fixed cost will be equal to the total contribution. Total contribution. You can see that. So at the BEP point, BEP means profit zero level, fixed cost should be equal to the total contribution. Then only you can get a zero here, right? Now, how did we get this 3000 from this point? We got the total contribution and we divided the contribution per unit and got the number of units. Without coming back, if the total contribution equals the fixed cost also, and if the fixed cost is given, can't we take the fixed cost and divide it by the contribution per unit? Yes, it's the same thing, same value, right? Even though we don't have the total contribution with us, if the fixed cost is available, what happens if you divide this contribution per unit from this fixed cost? Aren't we getting the same 3000? Going backwards, coming is also the same. Why? The fixed cost is equal to the total contribution. So you don't need to wait to find the total contribution and divide by the contribution per unit to get this. Since at the BEP level, fixed cost is equal to the total contribution, what you can do is fixed cost can be divided by the contribution per unit to find this. So the easiest way is what? Easiest way is, let me show you. Right, what you can do to find the break-even point in units. BEP, break-even point in units, you can get by what? Fixed cost can be divided by the contribution per unit. Contribution per unit. Ideally, we should divide the total contribution by contribution per unit to find this. But at the BEP level, you know that both the total contribution and the fixed cost is equal. So you don't need to go back and find this one first and go through this. Since you know the fixed cost, if you divide the fixed cost by the contribution per unit, you will be arriving at this BEP in units, right? So this is the formula to calculate the break-even point in units. This is the logic behind it. This is the logic behind it. This is how we get it. Right? If you understood why we divide the contribution per unit by fixed cost, so other way around, please raise your hand without using the total contribution. Why? The total contribution is anyways equal to the fixed cost at the BEP level. That's it, right? So we can simply take the fixed cost instead of the total contribution, because both of them should be equal. So in this particular question, they have given us the fixed cost and the contribution per unit we found from the first question. So using those two, just fixed cost divided by contribution per unit, you will be arriving at your answer, right? So the fourth one is also done. Fourth one, this is in BP in points of units. I'll keep the screen for a few seconds, then we'll move to the next one. Right? Please raise your hand if you need more time. You know what? Right. Then next one, value, BEP in value. It comes on the point 4 anyways. break even point in value. Now tell me, haven't you identified the break even point in units? Which means you have to sell 3000 units. To get it in value, if you have the number of units, multiply it by the selling price. Then you will be getting what? The total sales that you would need to achieve the break even point. Right? Got it? So this is BEP in units. So BEP value equals BEP in units that you found multiply by the unit selling price. Unit selling price. Then it will tell you how much of sales that you have to do. Here they told how many units that you have to sell. Here you are telling how much of a sale. If you multiply by the unit selling price, you will be getting the total what? Total sale that you would need to do. So the BEP in units is 3000 here, and the unit selling price is 200. Per unit selling price 200. If you multiply 3000 by 200 here, it should be 600,000, which means you have to do 600,000 sales in order to achieve the what? Break even point, which is profit is 0, right? So that is BEP in value, right? Any questions? BEP value, right? BEP value means what? So here, first think about the break even point that we got in units. What is the meaning of this 3000? Right? I think I didn't write this. BEP in units equals 3000. This is the answer. What is the meaning of this? We have to sell 3000 units in order to achieve a profit of 0. Now this is in units. How to tell it in the value? We are selling 3000 units, we can tell. If you sell those 3000 at 200 rupees each, you will be arriving at the value, right? Selling 3000 means, so the selling price they have given per unit, which is 200. If you sell 3000, one at the rate of 200, how much will you be getting as the sales? That is the value. That is why we multiplied the number of units that we got in the BEP units by the unit selling price. Got it? So we converted it into sales. Early equals value. Now it's early equals units. Now it's the value. Right. So this is the method 1. There's another method. This is the method 1. There's another method how this BEP value can be found. So I'll explain you the method 2 also. This is the second method. This is the second method. There's another method. So remember, for when you are going to the examination, you should remember both the methods, not only one method, right? BEP value can be taken in this way also. BEP value. So here, if you can remember, BEP in units, we took fixed cost. I'll take the fixed cost on top. Fixed cost on top. And you have to divide it by profit volume ratio, which means the contribution to sales ratio. Contribution to sales ratio. Sales ratio. What do you mean by contribution to sales ratio? Profit volume ratio. Profit volume ratio. Right? Ratio was what? Can you remember? It was 40%. Right? So then what you would need to do? Fixed cost is 240,000. You have to divide this by 40%. 40%. Use the calculators. You will be arriving at the same 600,000. Why I'm asking you to remember both these methods is because sometimes the examiner may not give the something like this. So if the examiner has given only the fixed cost and the contribution per unit, still you should be able to find the break-even point in value, right? So this is the second method. Either you can multiply the units by the selling price per unit, or fixed cost divided by the contribution sales ratio. Right? So we discussed about the break-even point also. Right? How many left? There's only a few left to be discussed. Then we are done with the theoretical part of it. Then it's just practicing the questions. Right? So what's the next one that they are asking for? Question number 5. Please raise your hand if you need more time. If anyone needs more time, please raise your hand. Right. Please make sure that you remember all these formulas. All these are logical formulas. Huh? So it's not like rocket science, logical formulas. Right? Shall we go to question number 5? 5. What they are asking there, question number 5. Margin of safety. Margin of safety. I'll keep the screen for a while. Anitya Dhoni. You want this one? Right, I'll keep. Huh? Right? Then the margin of safety in units. Margin of safety. Margin of safety. Let me first explain what this margin of safety is. So I'll use the same wordings. The gap between the present capacity, the gap between, then I explain now. The gap between the present capacity and break even point. And break even point is known as the margin of safety. Right? Is margin of safety. Margin of safety. I'll do the same example. So I'm going to find the margin of safety in units. Margin of safety in units. When I do the calculation, you will find this is that margin of safety in units. Then I'll explain. Please write this one first. The gap between the present capacity and the break even point. Write that one first, the description. The gap between the present capacity and the break even point is the margin of safety. Now, raise your hand if you need more time. Harneet there. Right. Look at this. Huh? Now see, what is the break even point that we got? 3,000. At least you have to produce or sell 3,000 to make the profit 0 first without having a loss. Anything beyond that, aren't you in a safe stage? If you produce 3,001, you are safe by 1. If you produce 3,002, you are safe by 2 units. If you produce 3,500, you are safe by 500 units. If you produce and sell 5,000 units, you are saved by 2,000. Why? What is anything that we produce beyond this will become our safety margin. Safety margin. So in this case, can't you tell the safety margin or margin of safety in units? What is our current capacity? What is our current capacity? 5,000. What is the break-even point in units? 3,000. So we are good or bad? At least we should have 3,000 to make it zero first from the loss. We have 5,000 means it's better or not? Good or bad? Good or bad? At least we should have 3,000 to make sure that there's no loss, which means at the zero level. If we produce more than that, then only we'll be having profits. So is it good or bad? Having more than 3,000, good or bad? Yeah, it's good, right? By how much? By how many units we are good? By how many units we are good? 2,000. That 2,000 is the margin of safety, right? That is why I'm telling that these are logical. We have 2,000 more. That is the margin of safety, right? So what is our present capacity? We'll take the present capacity or current capacity. Current capacity in units, deduct break even point in units, right? So whether if it is plus, if it is positive, we are in a good place. Our current capacity is 5,000 units. The break even is 3,000 units. We are better by 2,000 units. So what is our margin of safety? 2,000 units. And I forgot to tell you, if it is units, please make sure to put the term units. If it's kilograms, like kilograms, right? So is it hard? That is margin of safety. That is margin of safety. That is margin of safety. Done. Now see, gap between the present capacity and the break-even point. So if we are producing or selling more than the break-even point, we are at a good level, which means we are in the safe margin. If this is minus, are we in a safe margin? Let's say we produce only 2,000, definitely we are making loss. Why? If we produce at least 3,000 only, we will be coming out of the losses. Got it? So the margin of safety is 2,000 units. This is in units. And if I tell it in the value, now you should be able to tell me. Margin of safety in value. Margin of safety. Now think and tell me how to get it from the value. If you refer to the previous break-even point, you should be able to tell me. By how many units we are good? 2,000. In the value, by how much of sales we are in front, ahead? 2,000 into what? Tell me. 2,000 into the selling price, which means the margin of safety in units multiplied by the selling price. You know that by how much you are ahead with the sales, right? 2,000 into 200, very good, right? So to get this, we can get the margin of safety in units and multiply it by the selling price per unit. Selling price per unit. So here 2,000 was our margin of safety. If we multiply by the selling price, you will be arriving at 400,000 rupees, which is the margin of safety in value. Put rupees, dollars, if they have given something like that, right? Got it? Is it hard? Hard? මේ තරම් ලීසිය කොහෙවත් නැහැ. Right? I'll keep the screen. Right? So this is the method one. There's another method. This is the method one. Method one. There's another method to get the margin of safety. Method two. If you can remember, didn't we find the profit earlier? What was our profit? What was our profit? I'm not sure whether I have it here. No, I don't have the profit. What is the profit that we calculated earlier, Buddha? Can someone confirm? Because with the power outage, it was gone. What was our profit that we calculated earlier at the 5,000 level? How much was it? Here, 160,000. Thank you, thank you. So the profit was 160,000. Huh? I'll put it here. The current profit or the profit was 160,000. Huh? Current profit at 5,000 level. We at the 5,000 level, it was 160,000. You have another way of getting this margin of safety. By how? Margin of safety in value can be taken in a different way. Since you have the profit with you, profit can be divided by contribution to sales ratio. Contribution to sales ratio. Contribution to sales ratio means the profit volume ratio. Profit volume ratio. Profit was 160,000. If you divide it by the contribution to sales ratio, the profit volume ratio, which was 40%, you will be arriving at the same answer, which is 400,000. Method 2. You should remember both the methods. Don't know in what method the examiner will test. Sometimes he may not give something like units. If so, if you know the profit and contribution sales ratio, you have used this. If they have not given the profit, you have used this. So I can't tell that you can remember only one. You have to remember the both, right? Okay, the screen. So the margin of safety is also done. I'll keep the screen for a while. Please raise your hand if you need more time. Raise your hand if you need more time. Or shall we go to question number 6? Remember all these formulas that I'm telling you. Right. Next one. What they have asked next, the 6th one. Required sales volume to achieve 100,000 profit. Now let's say you are doing a business. Let's say by the end of this month, you need to purchase a laptop, right? So the laptop cost is 100,000. Then if you are doing a business, you should target for 100,000 profit this month. Then I'll tell you how many units that you have to sell. So that is achieved through required sales volume, which means required number of units that we need to sell to achieve 100,000 profit. Question number 6, right? This will be required if you do a small business. Remember, you can target a profit and sell that targeted units. You will be arriving at the profit that you wanted to target. Okay. Can you show the previous question answer? Yes. Keep the screen. So the profit that we have taken here is the profit at the 5,000 level. This is our present volume. This should be our present profit. Tell on to that. I'll keep the screen. Once done, just tell me. Right, no worries. Then we are coming to the sixth one, expected profit or target profit. Expected profit or target profit. If we have a target profit or expected or target profit, right? So here what they are telling, required sales volume, they are asking about the number of units that we need to produce or sell to achieve 100,000 profit. 100,000 profit, right? Now, if I explain it in this way, let me explain it in a different way. So here, I'll jump back to one of the previous ones. Right. Now look at this. Now look at the break-even point example. Now the profit is 0 at the break-even point. To make this 100,000, total contribution should be how much? Let's say the target profit is now 100,000. The profit should be 100,000. That is what we are targeting. And the fixed cost will never change, right? So to have 100,000, what should be our total contribution? To have 100,000 here, what should be our total contribution here? Tell me. Here. Shall I do it there? Freshly? In a fresh way? Right. Now look at this. I'll start from the beginning. Selling price per unit was 200. And the variable cost per unit was 120. And we got 80 as what? Contribution per unit. And we got the total contribution. Total contribution. From what? By multiplying the contribution per unit into number of units. Then we got what? The total contribution here. So the contribution per unit here is 80. This is 80. Now we are trying to figure out how many units that we need to sell to achieve a profit of 100,000. So we don't know the total contribution yet. If we deduct the fixed cost from here, which is 240,000, the target profit is 100,000. Target profit is 100,000. This is what is the target profit. To have 100,000 here, what should be the total contribution? Here, 340,000, right? 340,000. So this should be 340,000. We went backwards and identified that this should be 340,000. To make this 340,000, 80 should be multiplied by how many units? How to get that? 340,000 divided by 80, you will be getting this number. Right, that's the answer. Now tell me, how many units we need to produce to make it 340,000? Here, how many units? So that is the number of units that we will be needing to produce or sell to make sure that the target profit is 100. We achieved it. So what's the number of units? We went backwards and identified the total contribution, how many units that we need to sell or produce in order to achieve this 340,000 contribution. 80 into this will become 340,000. Tell me. Now you have to be smart and speed up and tell me. To get this number, 340,000 divided by 80. How many units? Here, I'm getting answers. Unmute again, but no tries there to unmute today. How many units? 4,250 units. 4,250 units. So you have to sell or you have to produce 4,250 units in order to achieve a target profit of 100,000. Now, if you know all these formulas, you can tell that please sell. So if you are my servant, if you are my employee, I'll be telling somehow you have to sell 4,250 units. Does he know why? What the plan is? No. As the manager, I know why. I am targeting a profit of 100,000. I'll be giving instructions to my employees. you should complete 4,250 worth 50 units sale this month. That is how instructions are being given to the employees. From the top level, we know what we are targeting. The target number of units will be given to employees by targeting this profit. They don't know this, but they are focusing on somehow selling 4,250. If they achieve it, we know that we have achieved our target from the manager's perspective. Right? Please raise your hand if you understood how to get this. If we have a target or expected profit, this is how we have to get the number of units. Right, put your hands down. Now, as I told you in the previous case, finding the BEP, you did not want to go in this way. I told you a small, easy way to do that. There's a small, easy way in this way also. Now, how did you get the total contribution here? You had the fixed cost, and how you got the 340,000 to this 440,000? What did you add? For the to make it 340,000, what did you add to this 240,000 to make it to 340,000?
100,000.
100,000. What is that 100,000? Target
Target
profit. So can't you tell it in this way? Target profit. If you have a target profit and if you are focusing on the number of units, can't you tell like this? You have to take the fixed cost and at the target profit, then it will make what? The contribution that you are expecting. Then it will make this. Then this one will be divided by the contribution per unit. Divided by contribution per unit. Isn't this easy? The formula. This is the logic. This is the formula. So how we got this to 340,000 is by adding this 100,000, right? Fixed cost plus the target profit. Then it will become the contribution, right? Then divide it by the contribution per unit. We will be finding this answer, right? Shall we do it in this way also? Fixed cost is how much? 240,000. Target profit is 100,000. Then it will make what? 340,000 divided by the contribution per unit, which is 80. You will be arriving at 4,250 units. So the formula that you can use is this. This is the logic behind it. So we have calculated everything. You don't need to do all of this. This was done for you to understand from my end. That is my duty, right? This is the formula. Fixed cost plus 100,000 will make it to the total contribution that we are expecting will be divided by the contribution per unit. You will be arriving at the number of units required. So you can tell, please sell 4,250 units. If they achieve that number of units target, you know that you have made a profit of 100,000. Please do some businesses. I'll guide you how to do businesses, how to target for profits, right? Start a small business after A levels. That is why I'm also having different types of companies without having this accounting knowledge. Don't think that you can do it. The CEOs, CFOs, everyone who is leading the businesses should know accounting. Accounting is something that everyone should know. If not, you'll end up losing, right? Harneder, expected target profit. This is in units, right? So this is in units. Now, can't we tell it in the value also? So the next one is about value, I guess. Required sales value to achieve 100,000 profit. Target profit, we have to tell it in value. Seventh one, target profit, we have to tell it in value. I'm not telling that the profit should be told in value. The sales volume achieve value, sales value. We are talking about the sales value, right? Now, can't you tell me the sales value? Can someone tell me? We know the number of units that we need to sell. We know the per unit selling price. Can't you tell how much of sales that you should do in rupees or dollars, depending on how the question is asked? Can't you tell? 4,250 units into per unit selling price, you will be getting the total sales in value that you need to achieve to get that target profit. How to get that target profit in units? You can get it target profit, this one, no, I'm not gonna tell it target profits, I'll put it as units. So let me find the best wording for that. Required units. So we found the required units here. Required number of units have to be multiplied by the unit selling price. Unit selling price. What is the required number of units that you would need to sell to achieve 100,000 profit? 4,250 multiplied by the unit selling price, which is 200. You'll be arriving at the answer. Right here, 850,000. 850,000. Right. And remember, this is the method one. There's another method. The second method always goes with the contribution to sales ratio. Right. The method two. Look at this. Now, how we got the units? Fixed cost plus target profit divided by contribution per unit. So if we take the same but without one variable, I'll take the sales value required, sales value required. So that's what we are finding out, which means this 850,000 should be equal to fixed cost plus target profit or expected profit, Now, without dividing this by contribution per unit, if we divide this by contribution to sales ratio, which means the profit volume ratio, you will be arriving at the same 850,000. 240 plus 100,000 plus 100,000 divided by 40%, which was the contribution to sales ratio. If you can remember, you'll be arriving at the same 850,000. You have to remember both the methods. The only thing is that sometimes you may need to start from the beginning to the bottom, sometimes from bottom to the beginning, sometimes from the middle to the other sides. We have learned all the concepts now, completed using the different methods also. Now it's about practicing. But we need capital to start. If you are genius enough, do you need capital to start? How to find the capital? Without having money, can't you find capital? What happens if you do tuition classes? Sell your knowledge, earn some money, start business. Do you need something to do classes and earn some money? What you need is this, right? You don't need to purchase something and sell every time. You can sell your mindset. You can sell it to someone and earn, take capital, start a business, right? There are ways how to find capital. If you have 0 rupees, still you can make it. Do some classes. Can't you earn some money? What will you be using? You will be not buying and selling. You will be using what you have here, right? Earn some money, collect some capital, start a business, go to the victory, right? Doing business is not hard. Doing business is hard for the people who has no knowledge here, or if the people doesn't know accounting, it's very hard for someone to do a business. To do a business, you should have this mindset plus accounting. If you have that, see how important this is. I'll keep the screen. So if you can remember, I told you that we are going to talk about 10 concepts. We have completed all the 10, even though this number is 7, right? If you can remember, here under number 5, we discussed margin of safety in units, margin of safety in value. Likewise, we have covered all the 10. Here, we have discussed break-even point under number 4, but both in units as well as in value, right? And the contribution to sales ratio we found in the first question, which means we have covered all the 10 concepts that we need to learn. Now it's about doing questions, right? Okay. Raise your hand if you need more time. Anyone needs more time? If anyone needs more time, please raise your hand. Right. Shall we go to the first question now? There's something new to learn. There's something new to learn. Question number 1. Now we are going to question number 1. We started with the question number 2 and learned each and every concept that you would need to learn. Question number 1. It's a small one. Question number 1. Look at this. Right. Below are some information extracted from a company manufactures a type of furniture. That's okay. Currently, 12,000 units of a particular. So shall I use the same area without going here and there? Right. Below are some information extracted, right? Currently, 12,000 units of a particular model are sold at a price of 350 per unit. Fine. We know the current production or the sale. We know the unit selling price also. Total production cost for 2,500 units is 500,000. If we produce 2,500, the total production cost includes both the variable cost and the fixed cost. Remember that. Total production cost means variable cost, fixed cost, both are included. Then when the production reaches 3,500 units, the total production cost increases to 650,000. Now they are asking the variable cost per unit, number 1. So what has happened here? At the units of 2,500, the total cost was 500,000. When they reached the number of units to 3,500, the total cost has increased up to 650,000. 650,000. By looking at this, tell me the unit variable cost. I'll give you 1 minute to try. If you find the variable cost, only you can do this. Then you can continue only if you find the variable cost per unit from here. Oh, someone can tell me. Just this is the way how we should try. Like that. I'll give you 1 minute. Just try. Thank you. Just give a try. Someone tell me the answer. I got one answer. Let's see. Is it 150 per unit? Correct. Can you explain how you got? Are you able to explain to the class? Or should I? If you like, you can. You got the answer accurately. No, I explained. I explained. Now, out of the variable cost and the fixed cost, what will vary or what will change depending on the number of units? Fixed cost or the variable cost or the both? Tell me. Now you have to unmute and tell me that. What will be changed? Variable cost, fixed cost, or the both? Only variable cost. So here you can see the 500,000 has gone up to 650,000. Can there be a change of the fixed cost to make it 650,000, or the increase of 150,000 should be just variable cost? Fixed cost does not change, just variable cost, which means the difference here, which is 150,000, is what? The variable cost. So this cost cannot be increased by the fixed cost. See, fixed cost is always inside this, right? So what increases is the variable cost only. Fixed cost does not change. So how many units have been increased? By 1,000. When you increase the units by 1,000, the variable cost has been increased by 150,000. So can't you get? The total variable cost is 150,000, right? The number of units, I'll take this as not the total variable cost, the change in the variable cost, right? The change means delta mark is show the change. Total cost. The total cost was changed by how much? Total cost was changed by 150,000. This total cost includes only the variable cost. When you divide it by the change in the number of units, which is 1,000, you will be arriving at the variable cost per unit. How much is it? 150. How you got that? Remember, if a cost increases depending on the increase of the number of units, definitely that portion should be variable cost. And you can take the total and divide by the number of units changed. So you can get the variable cost per unit. Got it? Right? Remember, what you need to remember is when it increases, the fixed cost does not increase, only the variable cost increase. So the increase should be the variable cost. So for 1,000 units, variable cost increased by 150,000. For 1 unit, you can divide it by 1,000 and get that answer. Raise your hand if you understood. They didn't give us the variable cost per unit this time. They gave us the total increase of the cost. The total cost will increase by the variable cost only, even though there are two types of costs. That is why I have taken the difference in the total cost. Total cost difference will become the change in the variable cost and divide it by the number of units increased. You'll get the variable cost. Now, variable cost per unit is 150. Now, can't you tell the contribution per unit if you know the selling price per unit? Now you can. Selling price to 350. Deduct the variable cost per unit. You will be arriving at 200, which is the contribution per unit. Right, number 2. Shall I do it here? I'll do this here. Number 2. Selling price per unit. Selling price per unit is 350. 350. And the variable cost per unit, you found out now that it's 150. Then you can get the contribution per unit. Contribution per unit, which is 200. If you didn't know how to find the variable cost here, you can't either do the second question also. Thanks that we know that how to get the variable cost per unit now. If they give the question like this, and the contribution per unit will become this. Right? Now what they're asking? Contribution margin ratio. Contribution margin means contribution to sales ratio. Or we tell it as the profit volume ratio also. Number 3, profit volume ratio. How to get that? Take this 200 as a percentage of the selling price. Profit volume ratio. Profit volume ratio equals contribution per unit divided by the selling price per unit multiplied by 100. Simply getting this 200 as a percentage of 350. That's it. 200 divided by 350 multiplied by 100. You will get the answer in a percentage. What is the percentage? Here, 57.14 again. 57 0.14. If you get decimal places, go to 2 decimal places only. 57.14. I'll keep the screen. I'll let you find the fixed cost. How to find the fixed cost? Now find the fixed cost. Do and tell me. Somewhat genius in the class. Anyone? Any genius person? Screen is blurred. Now you should be able to see. Now you should be able to see. Let me reduce the brightness a bit. Can you see now? Right. Now look at this. Now look at this. So let's take one of these activity levels at 2,500 level. The total cost is 500,000. 3,500 level, it's 650,000. Now we'll take this 2,500 activity level number 4. At 2,500 unit level, what is the total cost? What is the total cost? 500,000. Total cost is 500,000. Now, since you know the variable cost per unit, which is 150, if you multiply this per unit variable cost by the number of units, you will be getting the total variable cost. So, can't you deduct the total variable cost from this? Total variable cost, which is at the 2,500 level, multiplied by the per unit variable cost, which is 150, right? 2,500 into 150 is how much? So you can get the total variable cost relevant to this 2,500 units. How much is it? 375,000. 375,000. So what is remaining then? What is remaining? The fixed cost. How much is the fixed cost? 125,000. Total cost is there. Total cost comprises of the variable cost as well as the fixed cost. If you know the variable cost, 150 per unit means for the 2,500 units, it's 375,000. So the difference between total cost and the variable cost will be the fixed cost. So variable cost in this 500 is 375, fixed cost is 125. Got it? Clear on it? Good, very good. So you can apply the same to the 3,500 level also and see if you want, right? Let's take at 3,500 level. So the total cost would be 650,000. 650,000. I'll use a different way to show you now. This 650,000 should have the total variable cost and the fixed cost. Total variable cost is how much? 150 per unit variable cost into 3,500. How much is it? 3,500 into 150. How much is it? How much is the total variable cost? 525,000. 525,000. So out of this 650,000, 525,000 is the variable cost. So what is the fixed cost? 125,000. So you can see that irrespective of the activity level, the fixed cost remains the same in both the two activity levels. Right? Done. This is also done. I just got the message. Thank you. I'll put a thank you message. I just dropped you a message, Puta. Right? Harid. Right? We have completed the first question also. We have completed the first question also. Right? I'll keep the screen for a few seconds. Then we'll jump to the third question also and see. Please raise your hand if you need more time. Please raise your hand if you need more time. Right. Now I'll explain you something new. If you can remember, tell me, can the fixed cost change? Yes or no? Can the fixed cost change? Yes or no? Yes. Small answer. Can the fixed cost be ever changed? Yes or no?
No.
Hmm. Good. Any other answers? If I ask the same question in a different way, let's say we have a bus. We have a bus. This looks like a loaf of bread, but try to understand this as a bus. Let's say we have 60 seats in this bus. Let's say I ordered the bus to go on a trip. Right? Let's say the cost is 100,000 for this bus. So, will this 100,000 change if only one person joins the trip? I have to pay 100,000 anyways. One person comes. Will this change? Two people come. Will this change? Three people come. Will this change? So, does the fixed cost change? Yes or no? Can the fixed cost change? Yes or no? Again. Now I'll ask a different question. What if 61 people come? What if 61 people come? What should I do? Then the fixed cost will be changed. Then I will be needing another bus because there's another person. 62, 63, 64, it will remain as the same. We'll be having two buses. If it becomes 121, then we will be needing another fixed cost. Sometimes fixed cost behaves like this. That is semi-fixed cost. Sometimes, let's say I'll put 60 here. I'll put 60 here. And no, I'll start from 30 here. So it will be easy. 30, 60, 90, 120, 150, 180 likewise, right? Cost I would say 100,000, 200,000 and 300,000 for an example. If I have 0 people, still the cost would be 100,000. Up until we get only 60 people, this will never change. The fixed cost will never change. But if I get more than 60 people, suddenly I will be needing another bus. Up until 120, I will be having another one extra bus. If it exceeds more than 120 also, I will be needing another bus. Right? Sometimes the fixed cost can behave in this way. Right? Depending, let's say, if we exceed the capacity, let's say the hall is there for 100 people, 100 students. What if the 101st student comes? I have to go for the next available hall. There will be 100 seats there also. Then up until 200 people fills, I am in the same way. If 201 people come, we have to have another hall. It's like this. Up until 60, up until we fill the capacity, we'll be having no extra cost. But when it exceeds, we'll be needing another extra cost. So then for the next bus, we can fill from this 60 to 120 another 60. It will remain the same here. Then if 121 people come, we need another bus. From there, will be there until 180. If 181 people come, it will go like this. So this is the fixed cost, but if the capacity exceeds, the fixed cost can go like a staircase. Please raise your hand if you understood. Raise your hand if you understood. Everyone, simply, if you have one bus with 60 seats, up to 60 people, no change. If the number of people exceeds, then you will be needing another bus. Up until you feel that also there will be not change. There will be no change here. If the capacity exceeds there also, you will be needing another bus suddenly. Then up to the next 60 people, it won't change. But time to time, there's a chance for it to be changed depending on exceeding the capacity, right? So the fixed cost can behave in this way also, right? If we exceed the capacity, please take down this one also. There's a fixed cost type of fixed cost behavior. Sometimes the fixed cost may need to be increased, right? I'll keep the screen. So there's another way of how the fixed cost can behave, right? So don't tell that fixed cost never changes. Fixed cost will be there up until a certain point. If the capacity is exceeded, you will be needing another fixed cost. If fixed cost will be increased, it doesn't mean that fixed cost will go like this. No, it will be like a staircase. Right. Raise your hand if you need more time. Raise your hand if you need more time. This cost, this zero, this the volume. Raise your hand if you need more time. I'll keep the screen. Right, let's go to question number 3. Question number 3. Go to question number 3. Right, different question. XYZ Home Appliances manufactures and sells household appliances. The company has provided the following details for the month of June 2023. Present sales volume, selling price per unit, contribution to sales ratio, profit volume ratio. Not, they have not given another part. Right, we'll see. Fixed cost is given. Number 1, calculate the contribution per unit. Contribution per unit. Question number 3, part 1. Question number 3, part 1. They're asking for the contribution per unit, right? How to get the contribution per unit? I'll move in this way. How to get the contribution per unit? We have to get the selling price per unit and then deduct the variable cost per unit. Then you will be arriving at the contribution per unit. Contribution per unit. Now the selling price is given. Selling price is 350. Selling price is 350. 350. Have they given the variable cost? No, they have not given the variable cost, but they have given the contribution to sales ratio, which means 45%. From the sales, contribution is 45%. So even without having the variable cost per unit, can't you find the contribution per unit? 45% from that selling price should be the contribution per unit. Multiply by and see, multiply by 45% and see. 350 into 45%. How much is it? What's the contribution per unit? 100 and, is it getting blurred? Let me check. Right, should be fine now. Here the 157.5. 157.5. Here they did not give us the variable cost per unit, but through the profit volume ratio we found that the contribution per unit is 157.5. Now can't you tell the variable cost per unit? I'm not sure why this is changing. Give me 1 minute. Right. So now can't you tell the variable cost per unit? What's the variable cost per unit? Can't you find that? Here the difference between this should be the variable cost per unit. Not sure whether they have asked for the variable cost also somewhere. Maybe they have not asked. Let's fill. We can fill. Now, since we know these two information, we can find the variable cost per unit. 350 minus 157.5. 192.5. Right? Harned. 192.5 is the variable cost. Contribution per unit is 157.5. So we found it through the contribution to profit volume ratio. Right. Number two. What they are asking for. What is the total contribution for the month of June? Total contribution. How to get the total contribution? Total contribution equals contribution per unit into selling price per unit. Selling price per unit. So the contribution per unit we found it as 157.5. Selling price per unit is 350. 350. So what is the total contribution? What is total contribution? Here. Here. 157.5 into 350. Here. Harned. I got everything accurately, right? No, we have to get the sales volume, a number of units, not the selling price. Sorry, we have to get the number of units, not the selling price. We have to get the number of units. Contribution per unit into number of units. Number of units is 4,000 units. So you have to multiply this by 4,000. Right. 157.5 into 4,000. 630,000. 630,000 is the total contribution for the total units that we produce or sell. You can do with me. And then number 3. Then number 3. Right. Let's see what the number 3 is. Calculate the profit at the current sales level of 4,000 units. How to get the profit? Current profit? You can get the profit by doing what? You can deduct the fixed cost by the fixed cost from the total contribution. You have the total contribution. Total contribution is 630,000. If you deduct the fixed cost from this, you will be arriving at the profit. You will be arriving at the profit. So what is the fixed cost? 300,000. So if you deduct 300,000 from this, you will be getting the profit of 330,000 at the activity level of 4,000. Here we have taken it for 4,000. That is why we can deduct the fixed cost and see. Right? These are logical. Then number 4. Number 4. Number 4. What they are asking. Determine the break-even point in units and in value. BEP in units and value. We'll get the BEP in units first. BEP in units first. How to get the BEP in units? You have to divide the fixed cost by the contribution per unit. So the fixed cost is 300,000. Contribution per unit is 157.5. 157.5. Right. Divide it and see. 300,000 divided by 157.5. How much is it? Now, what's the answer that you are getting? There's something new to learn here. There's something that you should learn here. The answer that you would be getting is 1904.76. Can you have 0.76 units? Yes or no? It should be either 1904 or 1905. What you should take? 1904 or 1905? 1905, right. Good. 1905. Here, if the answer was this, look at this. I'm changing the question a bit. Let's say the BEP you got as 1904.12. Then you have the options to select either 1904 or 1905. If it was this case, will you be selecting 1904 or 1905? Now, tell me. 1904, 1905. I need answers from everyone now. Tell me. 1904, 1905. Remember, still, even though this decimal place is lower than 5, you should go for 1905. Break-even point should not have any loss. If we go for 1904, you should have sold 1904.12 units, which means if you sell only 1904 units, you will be ending up having a loss. Having a small profit is better than having a loss. So you have to sell 1905, right? Remember, if you get a number and a decimal place, round it off to the next digit. Got it? If you sell 1904, you will be having a small loss. We should not be planning for losses. So go for the next one, 1905, right? So here in this case, anyways, in the examination, you will be getting whole numbers, right? Just wanted you to explain. That is why I use this. So this 1905.67 should be taken as 1905 because the units cannot be broken into pieces and given unless it's kind of something that we can weigh, right? 1905 BEP in units. 1905 units. And BEP in is that the fifth one? No, BEP value. They're asking for the BEP value also. BEP value. So you have two ways. Either you can multiply this number of units, BEP in number of units by the selling price. Selling price, that is one of the ways. 1905 into the selling price is 350 then. 350. So you will be getting the answer. Since this is in rupees, I'll put rupees. 1905 into 350 is 666,750. 666,750. Right? If you can remember, there's another method. You can divide the fixed cost, which is through 300,000, by the contribution to sales ratio also, which is 45%. You'll be getting a closer answer, not the same, because we have rounded off this, right? You can do this in the same method, second method also, which is fine, right? So this is done. Fourth one also done. Fifth one, what is the required sales volume to achieve a target profit of 120,000? They are asking about the target profits now. Now they are asking about the target profits. Number 5. How to get the target profit? We can add the target profit to the fixed cost and divide by the contribution per unit. Fixed cost is 300,000. Target profit is 120,000. Divide by the contribution per unit, which is 157.5. Now you can get the answer. Profit. Here, roughly you can get the number of units. 420,000 divided by 157.5. So we'll be getting the answer as 2666, which means you have to take it as 2667 units. 2667 units. Break even point in units. No, not the break even point. If you want a target profit of at least 120,000, you should have 2667 units. Right? This is the fifth one. Sixth, they have not asked for the. They have asked only for the volume. They have not asked for the value. If so, you have to multiply it by the selling price. Number 6. What is the margin of safety both in units and value at the current sales level of 4,000 units? Right? Margin of safety. Number 6. Margin of safety in units. So what we produce now is 4,000. Current capacity is 4,000. If we deduct the break even point in units, by how much we are good, we'll be getting the answer in units. Here the 4,000 minus 4,000 is අපේ මේ target volume, the volume that we are having right now. Let me check. 4,000 minus 2667, 1,333. By 1,333 units, we are ahead, which means we are in a good level, right? I'll keep the screen until you take down these. Then I'll go to the margin of safety in value. No, so this is not the break even point. I have taken the wrong one. The break even point is here, 1,905. It's not this. This is the target profit one. So the answer should be not this. You have to add the break even point. Break even point is here, 1,905. When you deduct 1,905 from 4,000, you'll be getting, yeah, 4,000 minus 1,905, 2,095 units. Sorry for that. Mistakenly, I took this as the break even point. Break even point is here, 1,905. Margin of safety in units were taken. Then margin of safety in value. They are asking for that also. Margin of safety value also they are asking. So since you have the margin of safety in units multiplied by the selling price per unit. Selling price per unit. 2,095 should be multiplied by, I can't remember the sales price, selling price is 350, multiplied by 350. Then you will be getting the answer. Check the answer. Here, 733,250 rupees, 733 250 is the margin of safety in value. Right. Sixth one is also done. Next one. Seventh one. What would be the break-even point in units if fixed cost increased to 350,000? Now the fixed cost is how much? 300,000. What will happen if the first fixed cost increases to 350,000? What would be the break-even point now? How to get the break-even point? Now this is question number 7. I'll take it here. Question number 7. Now the new fixed cost is 350,000, not 300,000. Now how to get the new break-even point? Break-even point in units. How to get it? Fixed cost should be divided by the contribution per unit. Now the new fixed cost is 350,000. If we increase the fixed cost to 350,000, so what would be the break-even point? New break-even point. Here, 350,000 should be divided by 157.5. Here, 350,000 divided by 157.5. 2,223 units. So remember, earlier, if you can remember, the break-even point when we had the fixed cost of 300,000 was 1,905. If the fixed cost increases up to this point, no point of selling only 1,905. You have to sell at least 2,223 units to make the profit zero or almost equal to the zero. Right? Somehow you should not be having a loss. A slight profit is better than having a loss. Right? This is the new BEP if the fixed cost is changed. In units, yes. Then number 8. If the company decides to increase the selling price to 400 per unit, how would that impact the break-even point in units and value? Right. So what happens now? The selling price so far is 350. Now what happens if we increase the selling price up to 400? Right. If we increase the selling price up to 400, 8-1. So early it was 350. Now the new selling price per unit now will be 400. If you can remember, now the variable cost and everything will change. Variable cost anyways we didn't know, but we knew the contribution per unit. Contribution per unit, if you can remember, 45% was the contribution to sales ratio, which means from this 400, 45 is the contribution per unit. So let's find the contribution per unit first. 400 into 40%, 45%. Here, 180. New contribution per unit is 180. New contribution per unit is 180, right? Now, what they are asking, selling price was increased. How would that impact the break-even point in units and value? So, if they have not asked us to use the new fixed cost that they have given, we have to use the original fixed cost that they have given. So if they ask us to consider the previous question and get the increased fixed cost, only we can get that. If not, we have to take the original fixed cost that they have given. Now, to get the new break-even point, if the selling price was increased, BEP in units will be the fixed cost divided by the contribution per unit. So the fixed cost is 300,000. We are not taking the previous question's fixed cost unless they have told it. So here the new contribution per unit is 180. So what is the BEP in units now? Here the 1667 units. Now if you can remember, earlier the break even point was, I mean, disregard this 350,001. If you can remember, 1905 was the break even point when we had the fixed cost of 300,000 and the contribution was 157, because the contribution is low. Now we are increasing the contribution. Selling price means we don't need to sell that full 1905. By selling this 1667, we can get what? We can get the break even point now, because the selling price has been increased. We don't need to sell the full amount that we sold earlier. By selling a less quantity, we can achieve the break even point, because the selling price was increased. Due to that, contribution per unit also increased. If we take this in value, now this is the units, then BEP value. Now you know the BEP in units, 1667. Now you have to multiply it by the selling price, which is the new selling price in the same question, in the same 8th question, which is 400. Multiply 1667 by 400, it will be 666,800 rupees. They are asking the BEP value also in the same question. Right? Was there anything else? Oh, only 8 questions. There's one. What is the impact of a 15% increase in the number of units sold on the company's profit? Now what has happened? What is the current sales volume? 4,000. What happens if we increase this 4,000 by another 15%? The new sales volume will become what? You have to see that. 15% neither. Question number 9. Question number 9. So existing sales volume is 4,000. So if they are telling that the sales volume will be increased by 15%, so then you have to multiply this by 15% and get the new sales volume. New sales volume or new number of units. 15% means, and then add this, you have to add 15%, not multiply. You have to add this 15%, which means take the 15% of 4,000 and add it to 4,000, you will get the new sales volume. If not, you can multiply it by 115%. So what is the new sales? 4,500 into 15% is 675 plus is 4,000 here. Here the 4,000 into 1.15, 4,600 neither. Yes, 4,600 is the new sales volume. What has happened? This 4,000 has been increased by 15%, right? So the new sales volume is 4,600. Now what they are asking for? What is the impact of 15% increase in the number of units sold on the company's profit? Now they are asking about the profit. Now we know that. Now if some details have not been given inside the question number 9, so we'll have to go to the top and see what the original information that they have given to get the rest. Now, how to get the profit? How to get the profit? Profit comes here. To get the profit, we have to deduct the fixed cost from the total contribution. From the total contribution. How to get the total contribution? Number of units on or the contribution per unit. I'll take it in that way. Contribution per unit multiplied by the number of units, right? So what's the contribution per unit? Now we are going to the original details. Huh? We can't tell that the contribution per unit is 180. That was given in a different question. If they are not asking to follow the 8th question and get the new contribution per unit, you have to go to the original ones. Huh? What is the original contribution per unit? If you can remember, we got it as 157.5. 157.5. New number of units that we sell is 4,600. And the fixed cost, the original fixed cost that we have is 300,000. Right. Now see. 157.5 into 4,600 is 724,500. When you deduct the fixed cost from it, you'll be getting 424,500. We have completed this question. Keep the screen for a while. Marune, it's about formulas. Huh? Good. For those 600, you have given the answer also. Very good. Please raise your hand if you need more time. Raise your hand if you need more time. So now it's all about taking these formulas into the calculations. Huh? But there's a different way how they can test the question. And question number 4, production is given, selling price is given, right? Cost breakdown is given, cost element is given, and what is required? They are asking for the same set of information. They are asking for the same set of information. If they give something like this, look at this. So this will be a homework for you, but I'll tell you how to do this, right? Only thing is that they have given the cost elements separately. Now, if we look at this, so these are the costs. Direct materials. Now you should tell me whether it's a variable cost or fixed cost. Direct materials, which means for the production, if it's furniture, the wood that we use. Does it depend on the number of units? Yes or no? Yes or no? Tell me. Yes or no? Yeah, in the 4th question, right? Sorry. Yes or no? Kian? Yes or no? Yes. Direct labor per unit will be paying this much for a labor. Variable manufacturing overhead, variable term is there. So what is the total cost, total variable cost here? If you take the total of that, this will become the variable cost. So there are 3 types of variable costs. Added together, that will become the variable cost that we need to consider. 150 plus 100, 250, 300. Variable cost here would be 300. Variable cost here would be 300. Right? Now, next one. Factory rent. Does the rent depend on the number of units you produce? Yes or no? No. Salaries for supervisors. Supervisors go around and see. Does it depend? Will the salary change for the supervisors? No. Depreciation of machinery? No. Administrative salaries in the office? No. Other fixed overheads? No. These are fixed costs. These are fixed costs. So what is the fixed cost that we need to consider? 100,000 plus 80,000 plus 50,000 plus 70,000 plus 50,000 again. What is the total fixed cost? 350,000. Fixed cost is 350,000. Now you have this detail. Production 4,500 is here. Selling price 400 is here. Variable cost 300 is here. The fixed cost 350,000 is here. Sometimes in the question they will be giving this kind of a breakdown. You can total up and see what's the variable cost and what's the fixed cost. Then take the question from there onwards. It's just a breakdown. In the previous questions, they have already added all these and gave us the variable cost and the fixed cost. Now in this case, what's the difference? They have given us the fixed cost and variable cost differently, right? Line by line. Take the total variable cost, total the fixed cost. This is the variable cost per unit. This is per unit, per unit. This is the total fixed cost. So can't you do it from there? These four were the information that we had in the previous question also. Can't you take it from there? Right. Right. If you can't, if you won't be able to recall this, please do this. Then you will be understanding that this is how we have to get the variable cost and fixed cost. Not every time they will be giving the variable cost and the fixed cost. You can't expect them to give it every time. Right. Then they are asking the same things. Contribution per unit, total contribution, total variable cost for the month here, month, and the total fixed cost, total cost, variable cost plus fixed cost if you are producing 4,500. So these things are what we discussed already. This is what we discussed already. Right? Selling price increase, fixed cost increase. I have given those what we discussed in the immediate previous question, which is question number 3. The only difference here is they have given a breakdown of the variable cost and the fixed costs. Right? See, you will try and see. Question number 4 is for your first work. Then let's come to question number 5. Then come to question number 5. Right? Shall we start? Shall we start? Right. Tecto is limited manufactures and sells a single product, a smart toy robot. Right? The following details are provided regarding the product. Production capacity is given, current profit is given, profit is given. Sometimes they ask us to find the profit. In this case, they have given the profit. Contribution to sales ratio, which is the profit volume ratio, is given. Fixed cost is given. Total contribution. Total contribution. Can't you find the total contribution? Can't you find the total contribution? Shall I do it here? Number 1, total contribution. Number 1 is total contribution. So how can you get the profit? Profit will be taken from total contribution minus fixed cost will be the current or the profit. In this case, they have given us the profit, which is 180,000. Also, they have given us the fixed cost of 300,000. So, to have a profit of 180,000 after deducting the fixed cost of 300,000, can't you tell the contribution, total contribution? Yes or no? What is total contribution? To have 180,000 here, after deducting 300,000, go backwards and find what the contribution is. What's the total contribution? Put to the chat. 480,000. If you had 480,000 here only, you can get this 180,000 as the profit after deducting 300,000. Isn't it easy? Yes. First one is done. First one is done. Right? The second one, contribution per unit. Contribution per unit. So you know the total contribution, right? You know the number of units. Can't you find the contribution per unit? Yes or no? How you get the total contribution? How you get the total contribution? Total contribution. Now you have to jumble this and see how you can get this. Contribution per unit will be multiplied by the number of units. Number of units. This is how you get the total contribution as this 480,000. To get this 480,000, the number of units is anyways given, which is 8,000. Then you have to find the contribution per unit. Contribution per unit multiplied by 8,000 is 480,000, which means 480,000 divided by 8,000 will give you the contribution per unit. What's the contribution per unit? Here. What's the contribution per unit? Here, tell me. Divide 8,000 by 480,000. 480,000 should be divided by 8,000. What's the answer? Answer is 60, right? Contribution per unit should be 60. This is how we found in a different way. We don't need to go from the selling price minus variable cost every time. So because some of the information may not be available, go backwards, upwards, downwards and see, right? For that purpose, you should have your formula knowledge here to pick that formulas quickly, right? So the answer here is 60. And the selling price per unit. Selling price per unit. Selling price have they given? No. Selling price per unit is there in which formula? Contribution per unit formula. We'll see. Selling price, we don't know. Selling price, we don't know. They have not given, right? But they have given the contribution to sales ratio. The unit contribution is there. Contribution per unit is 60. We found it. This 60 is the 40% of the sales. This 60 is the 40% of the sales. So the sales should be the 100%. 60 is the 40%. How to get the selling price? Don't you know? We have done enough number of these kind of examples in the margin markup also and other questions. How to get? 60 is the 40%. If 60 is the 40%, divide 60 by 40, multiply by 100, you will be getting the selling price. How much is it? Here, 150 then. Let me check. 60 divided by 40 multiplied by 100. Selling price is 150. How you got that? 60 is equals to 40% means 40% means 40 upon 100. So divide this 60 by 40 and multiply by 100. You will be getting this 150. You know how to get that. 150. Very good. Third one is also done. Fourth one, variable cost per unit. Now it's like nothing. Variable cost per unit, VC per unit. If you know the selling price and the contribution per unit, the difference between this is what? The variable cost. Variable cost per unit is what? The difference between the selling price and the contribution per unit. Selling price per unit is 150. If you deduct the contribution per unit, you will be getting the answer. If not, after you deduct the variable cost only, you will be getting this contribution per unit, which is 60. So what is the variable cost? To have 60 after deducting this variable cost, how much is it? 90 neither? 90. So the variable cost per unit is 90 rupees. That is why I told sometimes you have to start from the top and bottom, bottom to top, from the middle to the other two sides. See? And the next one, break-even point in units. Now most of the information is available. This is the fifth one. How to get the BEP in units? BEP in units, fixed cost should be divided by what? Contribution per unit. Fixed cost they have given as 300,000 divided by the contribution per unit that we found, which is 60. You will be getting the answer, which is the BEP in units. How much is it? How many units? 300,000 divided by 60. 5,000 units there. 5,000 units. 5,000 units. 5,000 units. Fifth one is also done. Then the break-even point in rupees. Right. Number 6. BEP in rupees. BEP in rupees means unit, value. So since you have the number of units, if you multiply that by the selling price, aren't you getting it? You'll be getting it, right? Or fixed cost can be divided by the contribution to sales ratio. Either way is fine. So how much is the BEP value? So what's the starting of your our syllabus? So most recent one was done in 2017. The 2017, yeah. So that is why we are mostly using 2017 to now past papers also, right? So here either you can multiply this 5,000 units by the unit selling price of 150, and the answer should be 750,000 rupees. Or else the method 2 is what? Fixed cost 300,000 can be divided by the contribution to sales ratio 40%. You'll be getting the same answer, right? The sixth one is also done. Then the margin of safety. What do you mean by margin of safety in units? Margin of safety in units. The production that you do right now, compare it against the break-even point. What is your production? 8,000. What is your break-even point? 5,000. So by how much you are safe? You are producing 8,000 now. Your break-even point is 5,000. So in order to save only, I'm not writing the formulas. Remember, if this comes to the second paper, you have to write the formulas and get the right. So the margin of safety is 3,000 units here, which means the current capacity deduct the break-even point in units. Margin of safety is 3,000. Margin of safety in rupees, right? Number 8. Since we know that the margin of safety in units now, let's take the value. We can take the margin of safety in units multiplied by the unit selling price. Margin of safety is 3,000 units. If you multiply it by the selling price, which is 150, you'll be getting the margin of safety in value, which means rupees. How much is it? 450,000. Am I right? 450,000. Or else you can use the other method. If you can remember, I told you this value can be taken by dividing what? Dividing the current profit. Where's the current profit? 180,000. You can divide this 180,000 by the 40% also and get the same answer. It's about dealing with the formulas that you know. That's it. This is rupees 450,000. We have completed the all 8 questions under question number 5. Right? Tell me if you need more time. If anyone needs more time, just tell me. Got it? Right. Shall we go to the sixth question also? Shall we go to sixth question? Right. Sixth question. Now the question is a bit different. Huh? Healthy Bites Limited manufactures and sells organic fruit smoothies. The following details are provided for the production of one batch of smoothies. Right. Direct material cost for each bottle is as follows: mango, banana, strawberry, honey. They'll be using these four as the ingredients. Those are the direct materials, right? And then direct labor cost per bottle is 180. And what they have given: production and overhead expenses. Production overheads. Overheads means irrespective of the number of products that we do. So there will be some expenses like this: admin, distribution overheads. Company plans to produce and sell 5,000 bottles. Selling price per bottle is 1,200. So here, what's the difference? They have given. Right. So here, mango, banana, strawberry, and honey, they will be using these as the direct materials, which means these have to be considered as what? Variable costs. 120 plus 80 plus 150 plus 50, altogether how much? 120, 80, 50, 150 and 50. So here altogether it's 400. Direct materials is 400. Direct materials is 400. This 400 is also a variable cost. And direct labor, which means to produce one bottle, they have to pay 180 for the person who is preparing it. So this is also a variable cost. So how many variable costs are there that we need to consider? The total of this plus this 180, altogether we have variable costs of 580. Now we found the variable cost per unit. This is the per unit variable cost. Sometimes they'll be giving the question like this. Then you have to find the variable cost by your own per unit. Found it. And then fixed cost. So they have given a set of information about production overhead, administration, distribution. So these are not relevant to the number of products. So these, the total of these will become what? The total fixed cost. Fixed cost will become 500,000. 500,000. Now can't you do this? Now can't you do this? Now the fixed cost is there. Also the per unit variable cost is there, right? Apart from that, they have given below the production, which is 5,000. Selling price is 1,200. Selling price is 1,200, right? I have given it. So calculate the following using the provided information. 1A variable cost per unit. We already found that 580, right? So we have to take the total of what? We have to take the total of these four, which are direct materials and the direct labor, right? If there are anything direct means to produce one unit, they have to incur this. So altogether it's 580. I'll take the whiteboard also. This question number 6. Question number 6, right? Question number 6, and this is part A, variable cost. Variable cost per unit, since we have already found it, it was 580 rupees, right? And B, they are asking for the fixed cost. Fixed cost also we found, which is 500,000 rupees, right? Right. Let's go to C. Let's go to C. Then what they are asking for? And the first one was variable cost per unit. The second one is not the fixed cost, total variable cost. So I'm gonna remove that. So B is not about the fixed cost. They are asking about the total variable cost. B is about total variable cost. Total variable cost. So now you know the per unit variable cost. Variable cost per unit is now known, which is 580. So how many units you produce? It depends on the number of units. You produce, let's say 5,000 bottles, which means you have to multiply this 580 by 5,000 to get the total variable cost. What's the total variable cost? 580 into 5,000. Here, 580 into 5,000, it should be 2,900,000, 2.9 million, 2,900,000, 2,900,000. This is the total variable cost for the 5,000 units, for the whole 5,000 units. Right? And then see, they are asking about the fixed cost. We found it. The total was 500,000. 500,000. And then D. We'll see what they are asking. I'll keep the screen for a few seconds. I'll keep the screen for a few seconds. Right. D, what they're asking for. Total cost at current production, total cost. Total cost includes the total variable cost. They're asking for the total cost. Total cost at the 5,000 level. This is the current production level. So what is the total variable cost? Total variable cost for 5,000 units is 2,900,000. We found it. 2,900,000. And if you add the fixed cost to this, fixed cost will not change at this point. Fixed cost is 500,000. 500,000. Fixed cost plus the total variable cost equals to the total cost. Total cost. So what's the total cost? 3,400,000. 3,400,000. This is the total cost. Right? Shall we check the part E also? So D is also done. E. E. Cost per unit. Now what they are asking for? Cost per unit means the total cost per unit, right? Total cost per unit. They are asking for the total cost per unit. They are not asking for the variable cost per unit. They are not asking for the fixed cost per unit. They are asking for the total cost. Cost means cost include total cost. Total cost should be divided by the number of units. What is the total cost now? E. So cost per unit. Cost per unit. Cost includes both variable cost and the fixed cost. So here we have already taken the total cost. So the total cost, if we divide by the number of units, you will be getting the per unit cost. 3,400,000 divided by the number of units, which is 5,000, you'll be getting the cost per unit. What is the cost per unit? It should be 680 rupees. Rupees 680. Remember, if they ask the cost per unit, that should include the variable cost plus fixed cost and then divide by the number of units. Then only you can see the average cost, including fixed cost, variable cost, all, everything. 680 is the answer for question E. Right? And then go to question F. Then go to question F. F. Contribution per unit. Contribution per unit. They are asking for the contribution per unit. How to get the contribution per unit? Selling price per unit, and you have to deduct variable cost per unit, variable cost per unit. From this, then you can get the contribution per unit. Contribution per unit. Have they given the selling price? Selling price per unit is 1200. That is the selling price. 1200. Variable cost per unit. Variable cost, I think we found here. What is the variable cost per unit? Variable cost per unit we found 580. If you deduct that 580 from 1200, you will be getting the answer. It should be 620, I guess. 620. Unit contribution is 620. Selling price was given, variable cost we found per unit, and then we can get the contribution per unit. F is also done. G. You can follow me and do a G. Total profit. Profit. So we are producing and selling 5,000. We need the profit. How to get the profit? Total contribution minus fixed cost. Then you can get the profit. Profit. Total contribution means contribution. Did we find that? No. Contribution per unit into number of units. Then we can get the total contribution, and we have deduct the fixed cost. Fixed cost we have already found that it's 500,000, and the contribution per unit we found here, which is 620. Number of units we know that it's 5,000. 620 into 5,000 is how much? 620 into 5,000 is 3,100,000. Yes, 3,100,000. If you deduct the fixed cost from this, you'll be getting the profit. It should be 2,600,000. Right? You can turn these questions as you wish, here and there, like that. Then H. I'll keep the screen for a few seconds. H, right? We look at H also. Break even number of bottles. Number of bottles means they are asking for the BEP units. BEP units. How to get? Fixed cost can be divided by the contribution per unit. Fixed cost is 500,000. Contribution per unit we found it as 620. You can get the BEP in units. Here, 500,000 divided by 620. 500,000 divided by 620. You'll be getting 806.4. So you have to go to 807. So you have to go to 807. 807 units, right? H is done. Then I. Okay, the screen if you are still doing. See how fast we can do this, huh? Nothing much. I. Let's look at I also. Break even point in value. Now this is easy. BEP value, you know how to get. BEP value. If you know the BEP units, BEP in units, multiply that by the unit selling price. Unit selling price. BEP units, we found it as 807 units. Unit selling price is 1200. 1200 into 807. 807 into 1200. How much is it? Here the 968,400. 968,400 rupees. Right. I is done. Then J. There was a J also, if I recall right. J, yes. Number of bottles at margin of safety. They are asking for the margin of safety. Margin of safety in units. Now, how many units we sell? What is our current capacity? Current capacity should be, we have to deduct the break-even point units to see whether we are in a good position, right? Current capacity is 5,000 either. Yes. Current capacity is 5,000 units. That's what we produce. BEP in units is, I think we got it somewhere here. Yes, BEP in units is 807. So if we had 807 units, we are making not a loss, not a profit, but we are in the 5,000 level, means we are in a very good position. If we exceed 807, now we are at 5,000 level, means what is extra will be our margin of safety in units. In units. Here then. 4,193 then. 4,193 units. We are doing extra units. Right. Right. This is the answer for J. And then we'll go to K. I think the K is the last one in this particular question. Right, we'll look at K first. A value of the margin of safety. They are asking for the value of margin of safety. Right. Now we can tell that margin of safety value. Margin of safety value. Right. Since we know the margin of safety in units, if you multiply that by the unit selling price, you'll be getting the margin of safety in value. So here 4,193 units into unit selling price is 1,200 or 1,200. 1,200. You will be getting the margin of safety in value. 4,193 into 1,200. How much is it? 5 million 5,31,600 rupees. 5,31,600. That is also done. See how many questions they can ask from few information that they have given. I'll keep the screen. So here, how many questions that we have done? Look at this. How many types of information that they can check through this particular question? Simply you have to pick the correct formula and do the test. That's it. Formulas are also logical, no? These formulas are also very logical. Right? Haridhar. Right. Now we are going to one of the most important questions, which is question number 7. There's something extra to learn there. Right? Then we can do the rest as homework. So will they be asking all of this in the examination? Not sure. Maybe they can ask, maybe they can pick a few and ask. Sometimes to answer the question that they are asking, you may need to do a different one and come to that point. Like if information is missing. Right? Let's go to the next question. Question number 7. Question number 7. Question number 7 is relatively small, but the way how you should think will be quite different here. There's another part here, neither. So this is the first part of 7, 6. There's another 2. We'll do that also before coming to question number 7. Right? I didn't notice that. That's okay. So we have done up to the question number 6 part 1 up to K, and there's a second part also, part 2. There's another part 2 in the same question number 6. I didn't notice that. Let's do that too also, and then 7 we are done. Right? An order for 300 bottles. An order for 300 bottles has been received from a corporate client. The selling price per bottle for this order is 900, and an additional overhead cost of 25,000 will be incurred. Should the company accept the order? Justify your answer. Now, apart from what you produce, there's an order that has come for 300 bottles, but you can sell it only for 900 rupees. Right? There will be extra overhead cost of 25,000, which means your fixed cost will increase by 25,000. Think, well, I'll give you 1 minute, then we'll discuss. Think whether you should accept or reject. You can't just tell, you have to think and tell me. Accept or reject. Think and tell me. Accept or reject. Accept. Okay, then tell me the reason. Accept means if we have a profit, we have to accept this. If we don't have a profit from this particular one, we have to reject it. Not having a profit means we don't have to get the order. Why should we accept? Right? The answer is correct. We have to accept. How? This is how we have to take it. There's 300 bottles. There's 300 bottles. We can sell it for 900 rupees. From this order, if we get this order, how much of a sale that we can do? 300 into 900, right? So we'll see. So the sale that we can make is 3000 units. So 300 units into, so how much, what is the selling price? 600, 900. What is the total sale that we can get from this particular order? 300 into 900, 270,000. This is the total sale. Now to do this total sale, we will be having a variable cost. What is the variable cost? How many units are there? 300 units we have to produce. So what is the variable cost that you will need to incur for the whole 300? So what was the variable cost in this case? We found the variable cost here on top later. We found the variable cost to produce a bottle. How much is it? 580. There will be a 580 variable cost. There will be a 580 variable cost. That is a cost for you, right? 300 into 580 here, 174,000 here, 174,000, 174,000. So what is the, so this is the total variable cost. So what is the total contribution that you will be getting? Total contribution. What is the total contribution that you are getting here? Here, 270,000 minus 174,000, 96,000 near 96,000. This is the total contribution. This is the total contribution. If not, how can you take the total contribution in the same way that we discussed earlier? I'll take that way also. Selling price. Now the selling price is how much? 900. Now the variable cost per unit. This is per unit. Variable cost. If you, it's okay for you to prepare this way also. Variable cost per unit is now 580. The selling price must become 900 because we are selling it at 900 only, right? So here the unit contribution would be 320. Am I right? 320. Yes, this is the contribution per unit. I'm doing the same thing. I'm getting to this answer. Contribution per unit. So forget about this. Let's take it in this way since this is the way that we did. So there are multiple ways. Then you can get the total contribution. Total contribution. So you can get the unit contribution and multiply by the number of units. Unit contribution is 320. If you multiply that by the number of units is 300, you'll be arriving at the total contribution. How much is it? 96,000. 96,000. Then you will be getting the profit finally after deducting what? After deducting what? Tell me. After deducting? After deducting what? So we are looking at the order now. What? This is a particular order. Special order. Special order. We have to deduct what? Can we deduct the fixed cost fully here? Or we have already borne that fixed cost. There won't be any fixed cost even though we take this order. What should we take? Remember, we do day-to-day production. For that production, we have already spent our what? Fixed cost. By taking this order, do we need to incur the same amount of fixed cost again? No, they have told something. In order for us to prepare this product, produce this, there will be what? An additional overhead. The fixed cost will be increased only by another 25,000 because of this order. The fixed cost that we already have, which is 500,000 if I'm not mistaken. This 500,000, anyways, for the production we have already spent this. So this 500 will not come again fully to the new order, right? Fixed cost is something that we have already borne, right? For that particular order that we are getting, we don't need to deduct this 500 again. because in the production we have that cost already. Even though we receive that order, even though we don't receive that order, that 500,000 was anyways there in the business as a cost. So because of this order, what happened? The overhead cost, which is a part of the fixed cost, increased. That is the part we should consider, increase in the fixed cost. That is what we have to see, increase in the fixed cost, because we are looking at the special load only, right? That 500,000 is relevant to daily usual production as well as for this. So that has already been incurred, even though we don't accept this. 500,000 cost was there. So because of this special order, the additional cost that we'll be getting is 25,000. Deduct that 25,000 and see whether there's a profit. See whether there's a profit. Is there a profit? There's a profit of 71,000. This is positive, means this is a profit. If this is more than 0, we are having a profit, means we can accept. If we are not having a profit, if this is minus, we don't need to accept. Since this is plus, we can accept. Right? This is the second point. This is the second point. Answer for the second one. Right? So this is about the special order. I'll keep the screen and then I'll go to the third one. I'll keep the screen for a few seconds, take this one down, then we'll go to the third part of this question, and then we'll go to the seventh question, and then we are done. The rest you can practice. I'll keep the screen for 1 minute. Please raise your hand if you need more time. Raise your hand if you need more time. Or shall we go to the next part of this question and then the seventh question? Once we are done with seventh one, you already know everything. It's about practicing after that. Right? Shall we go to third one? Now look at this. This is done. This one. The company expects to increase the production and sales by 15%. 15%. Give 1 minute. Right. So the production will be increased by 15%. What is the current production? So we'll find that first. What is the existing production current? Current production is 5,000. Is 5,000. If they are increasing this by another 15% means, so what is the new production volume? New production volume 5,000 into 115%. Here, 5,750. New production will be 5,750, right? What they are asking for, we'll see. While the variable cost per bottle remains unchanged, variable cost will be 580 as it is. Variable cost per unit will remain as 580, no change. Fixed cost will increase by 10,000. Fixed cost now is 500,000, it will increase by 10,000. New fixed cost, earlier it was 500,000, with this 10,000 it will be 510,000. So we are collecting information now. It will be 510,000. Now what they are asking for? If the company expects a profit of 500,000, expecting a profit means a target profit. What price should be each bottle be sold next month? They are asking now, not the total contribution or anything. At what price we have to sell this? Now they are asking for the selling price, which means we have to start from the beginning, right? So selling price is what they are asking for. Selling price we consider here. Selling price is what they are asking for. How we get the contribution per unit? We deduct the variable cost per unit. Variable cost per unit we deduct, and we get the contribution per unit. Contribution per unit, right? So here, in order for us to get the contribution per unit, we don't know the selling price. What we know is the variable cost per unit, which is 580. What we know will fill. Then how to get the total contribution? Total contribution per unit multiplied by number of units. Here also, since we don't know the contribution per unit, as we don't know the selling price, we can't do it. Number of units that we produce now is what? 5,750. If we multiply this by 5,750, we will be getting to know the total contribution. But since we don't know the contribution per unit, we can't do that also. When we deduct fixed cost from this, now the fixed cost is 510,000. They have given it to us. New fixed cost 510,000. What is the profit that you target? Profit that you target is how much? You expect a profit of 500,000. So the expected profit should be 500,000. Now tell me, can't you go backwards and get to know what the selling price is? Come this way, this way, this way, this way. Can't you do that? To have a profit of 500,000, what should be the contribution here? After deducting 510,000, you should get the profit. This should be what? 1,010,000. If this is 1,010,000 only, you can get 500,000 after deducting 510,000. To get 1,010,000 here, contribution should be multiplied by 5,750 to get this, which means this one divided by this, you will get the contribution per unit. What is the contribution per unit? 1,010,000 divided by 5,750, 175.65. Contribution per unit should be 175.65. So now we found the contribution per unit that we need to put here, 175.65. To get 175.65 as the contribution per unit after deducting 580, can't you find the selling price now? Can't you? You can add these two. So you'll be getting the answer, 175.65 plus 580. If you have solved this for 755.65 only, you can get this answer after deducting the variable cost per unit. So what is the selling price that we should use? Selling price should be rupees 755.65 in order to achieve this profit if we are planning to sell 5,750 units. How we started? We didn't know anything. We came backwards this way, and we went up. Right? Finally, they asked for the first point that we discussed at the first phase. Right? We started from selling price. In this case, we had to find selling price coming backwards. Right? It's simply the logic. Right? Please raise your hand if you understood the logic behind this going backwards. I'm trying to increase the number of marks that you'll be getting. Raise your hand. Raise your hand if you understood. Raise your hand if you understood. Everyone. just to see whether you understood good, right? Nice. We'll come to the last question, which means the 7th question that we are going to do now, which is a simple one anyways, but there's a small point that you should remember. So once we are done with the 7th one, we have completed marginal costing, you can practice the next questions, right? It's the same. Logic is the same, right? I'll keep the screen for a few seconds. Right? Am I good to move? The last question that we are doing in the class. Question number 7. Now look at this. Mr. Ranjit is planning to open a fitness center in Kandy. Those who are in Kandy can go. The expected income and cost of the fitness center is as follows. Right. Now look at this. Now you have to identify what is the revenue, what is the variable cost, and what is the what we call the fixed cost. Look at this. Registration fee. So we have to think it from the business's perspective. Mr. Ranjit's business, right? Registration fee 5,000 per annum. From a person, we will be getting how much a year? 5,000. So is this the cost or is this a revenue? Is this a selling price or a cost? From Mr. Ranjit's perspective, from his business perspective, registration fee will be collected by Ranjit, right? So likewise, you have to see whether it's a revenue item, sale item, variable cost or fixed cost, or then you can continue. Right. Look at this. Required number 1, calculate the annual contribution per member, which means contribution per unit. Number 1, you have to get the contribution per unit. How to get that? Selling price per unit, then you have to deduct the variable cost per unit, then you can get the contribution per unit. Per unit means per member, right? So the selling price from the Ranjit's perspective, what are the selling prices? Registration fee, that is something that he will be collecting as a sale. Membership fee, apart from the registration, there will be a membership fee also. Personal training fee per month. So these two are for annum, this is there for month, right? So now we are going to find out the selling price first. Selling price. Selling price. There was a registration. Registration amount was 5,000. And there was a membership fee. Membership fee was 15,000. And training charges, neither. Personal training 3,000 per month means per annum how much is it? 3,000 into 12, 36,000. So training charges should be 36,000. Remember, they have given the rest per annum and this per month. So you have to convert that into per annum and see what's the total revenue per member, which means if you are having the gym, you will be having 5,000, 15,000 plus this 3,000 into 12. That is the total income or the total sale that you will be receiving as the fitness center's owner, right? So what is the selling price? Selling price should be the total of these. It should be 56,000. 56,000 is the selling price. 56,000 is the selling price. Then we have to see what the variable costs are. Variable costs. Equipment maintenance 2,000 per month per member. If it is per member, what is this? They have to incur expense of 2,000. This is a variable cost. Gym accessories 1,500 per month per member, right? So these are maintenance expenses. These are maintenance expenses, right? So this is per month, per member. This is a variable cost. Trainer salary per month per member. Salary should be paid per month per member. This is also variable cost. Rent of the premises 25,000 per month. Is the rent relevant to per member, which means per unit? No, this is a fixed cost. This is a fixed cost. It does not depend on the number of members, the rent. Staff salary is per month, not per member. This is a fixed cost. Marketing and promotion, 10,000 per month. It does not depend on the number of people. Fixed cost. And here, remember, they have given these details a month. So what you should do? You have to multiply these by 12 and get the variable cost and the fixed cost per year, since we are planning this for year. Equipment maintenance, 2,000 into 12, 24,000. Gym accessories maintenance, 1,500 into 12. Here, 18,000 per year. Trainer salary, 1,000 per member means for the year per member it will be 12,000. So the total of these will become the variable cost, right? 24,000, 18,000 and 12,000. How much is the variable cost per unit, per member? Here, 24, 18 plus 12, it will be 54,000. 54,000. Right? Variable cost per member, member means unit. Variable cost per unit is 54,000. Then you know the contribution per unit is 2,000. You'll be receiving 2,000 from a member, right? Variable cost, since I have prepared that in the duty itself, I'm not going to do it here, right? But that's how you have to get it. 2,000. Contribution per unit. Unit means the member, right? I'll keep the screen also. Now you can see. Rent of the premises, 25,000 into 12. Here into 12. Here into 12. Since that is not relevant per member, but it's relevant per month, which means fixed costs, right? So you can get the fixed costs. 25,000 into 12, 300,000. This is 300,000. 50,000 into 12 is 600,000. And marketing, 10,000 into 12, 120,000. 120,000. So what is the total fixed cost? 1,020,000. 1,020,000. 1,020,000. This is the fixed cost. Annual contribution per member was done in the first one. Calculate the annual total fixed cost. Annual total fixed cost is this one, 1 million. This is the way how we have to do a second one. 1,020,000. I'll put it here also. I'm not putting the calculation here. Rupees 1,020,000. Rupees 1,020,000. Right? That is the answer for the second part. And then the third one. Number of members required to cover the total annual costs. What they are asking for? To covering the total cost means what? At least the profit or loss should be zero. Cost covering means profit is zero. Number of members, what they are asking for? Break even point in units. See here, they are asking for the break even point in units here. They are asking in a different way. They are asking for the BEP units. BEP units. How to get that? Fixed cost should be divided by contribution per unit. What is the fixed cost? 1,020,000 divided by contribution per unit is 2,000. How many members are required? How many members are required? How many? 510 members. If you have 510 members only, you can at least cover the cost. If you have 509 members, you are having a loss. If you are having more than 510, that number of units will be the margin of safety, right? So the way how they ask is how many members should be there in order to cover the total cost. Total cost cover means covering the total cost means you are not having a loss. It's a 0 point. Number of members means the number of units. The way how they ask the question will make you confusing, but make sure you are not get confusing. Number 4. Number 4. Determine the number of members required to earn the profit of 300,000. What are they asking for? Units required for a target profit, right? Nothing else. So see how they are asking, huh? So we are targeting a profit. So we have to see the fixed cost plus the target profit should be divided by the contribution per unit. We will be getting that. Fixed cost is 1,020,000. Target profit is here. Target profit 300,000. 300,000 and divide by the contribution per unit was 2,000. Then you will be getting the required number of members. Since without putting units, I'll put the number of members. To have a 300,000 profit, somehow you have to do what? Do some marketing and get how many? 660 members. If you get 660 members, you'll be having a profit of 300,000. See, all these are they are asking a different way, but it's simply the formulas that we learned. Then number 5, I think number 5 is the last one. I'll keep the screen. Right? Shall you go to the 5th one? Let's see. Yeah. Last one. If 800 members are admitted and the membership fee for 15 of them is waived off, calculate the expected profit or loss. Right? Now here, if we allow 15 members to come in without the membership fee, right? So what is the selling price now? What is the selling price now per person per year? 56,000, right? If we add 800 members, but out of that 15 people are not paying the membership fee, means the selling price would be, or the total sales would be different, right? Now look at this. Remember, they are telling that 15 people will be given the chance to come in without the membership fee only. These two will still be taken from them. We see how the wordings change it. They are not telling that it is fully waived off for 15. The membership fee will be waived off. Registration fee will be still be taken. The training fee also still will be taken. The membership fee only will be waived off for that 15 people. So what if you consider that 15 people as not paying this full 56,000? Answer will be wrong, right? They are telling that they are waiving off what? Membership fee, not the total fee of 15 of them. Got it? So how many members are there? 800. We'll take the total sale in this way. Let's take it in this way. Are we taking? So what are these? So I'll take it here. It will be easy. Question number 5. There's a registration fee. Registration fee is 5,000 per person per annum. So there's no change to that. since there are 800 members, we will be charging it from all the 800 members. How much is it? 4 million. 4 million. Now when come to the membership fee. When it comes to the membership fee is 15,000 from a person, but from this only 15 people will be waived off, which means instead of 800 we have to take 785 people here. 785 people here, right? So what's the total? 11,775,000. 11 million, no. Oh yes, 11,775,000. Remember, 15 people were given the chance to not to pay only the membership fee, not the total 56,000. That's where things can go wrong, right? And the training fee. Training fee also will be taken from the whole 800, which is 36,000 into 800, right? So here you can see that 15 first people were allowed only for the membership fee, which means the revenue will go down only through the membership fee, right? Here it will be 28.8 million. 28,800,000. Yes. Now you can take the total sale or the total revenue. How much is it? 44,575,000. Right? Remember, the trigger point is these 15 people were given only the membership fee waive off, not the full. That's the trigger point in this question. Right? So this is the total sale or the total revenue. Now, since there are 800 people, variable cost. So we'll take the total contribution, right? Total contribution. So the variable cost that we need to incur is, so this is the selling price. If you can remember, the variable cost we took 54,000. 54,000. That variable cost of 54,000 will be there for all the 800 people. Why? Even though these 15 people didn't pay the membership fee, does it mean that the expense that Ranjit has to spend on maintenance, it will go down? No, right? It's like we have asked them to come free, but the expense from Mr. Ranjit's side is remains same for the whole 800, right? Multiplied by 800, then you will be getting the total contribution. This is the total variable cost. Then you will be getting the total contribution. Total contribution. Right. 54,000 into 800 is 43,200,000. So what's the total contribution? 1,375,000. Right. Then you can deduct the fixed cost. Which is 500,000. Now 1,020,000. 1,020,000, and then see what your profit is. How much is the profit? The profit should be 355,000. The question was easy. The only trigger point was, if you completely remove the 15 people from the revenue by using this total 56,000, you are wrong. They waived off only the membership fee. That is why here we got the 800 for other two, but 785 only for the membership fee. We allowed only 15 people to not to pay the membership fee. And no matter whether they are paying or not, still if they are using it, there will be a variable cost like this for the whole 800. Right? It does not depend on whether they pay or not. If they come without paying, still the cost would be there. Right? Deduct that, total contribution will be taken. When you deduct the fixed cost, profit will be given. Right? Okay, I'll keep the screen. හරිනේද? Right, the fourth question was anyway simple, and the question number 8, 9 and 10 is for your first work. You can do it practice. So we have completed the marginal costing. This is how the marginal costing will be tested. That's such a cunning question. Yes, definitely the examiner will be testing in this way for sure in this time also. I can guarantee that. This is a cunning question. So students have the chance to take this full 56,000 off from 15 people. If you do so wrong, they have the examiner at that time has done what? Played with the term. So this was I have extracted the past papers. I have looked at the trends, and by using that only I have prepared these questions also. The next are also like that, right? So I have picked what the trends of the examiners are. Look at this and remember this and do the rest of the questions. That's all. Marginal costing is done. Right, that's it for the day. So please make sure that you practice, rewatch the recording if you need, and do the rest of the questions. Right, this is the area where you can get the full marks if you have the attention to detail. Right. Thank you very much, everyone. Have a great day. We'll meet next Monday. Right. Bye bye. Thank you.